Maybe. Yeah. I'm I am kind of tired. But I've already caffeinated and still feeling kind of tired, so it's not really a good place to be sucking down coffee when you're just tired. So yep, pretty much the whole market today is looking pretty nasty. Yesterday when we were up, I don't know, it was kind of a intense stream yesterday. I was really on fire, I guess, about some trolling stuff, and then I was working really hard on this GME chart, and I went back to it this morning, and I don't know, man, sometimes it's like you go back to something and you're like, what the heck was I doing? Like I was possessed and I just kept going. I understand it better today, and I think that by going backwards and like really fixating on targets, like anchoring targets and just trying to really make it clean. Yesterday it was pretty darn clean, but it was not perfect. So I spent some time this morning and I tried to make it as perfect as a human could make it. I don't think that it's possible for me to be 1,000% sure that it's perfect. I built it on a weekly chart, and most of the time that's fine because you're talking about big picture stuff, that's fine. But then there were some weird little issues where, like on the weekly chart, I couldn't get a middle line for some of these, and I was like, I think part of that might just be because it's not actually like it might have been in like the middle of the week or something. Like there may have been more key dates that were not actually at the beginning of the week or something like that. So when I started messing around with it more, I was like, I got to get to a daily chart. Working on a smaller time frame is kind of hard for this though. There's a lot of data, so I wanted to get through this and have like a real conclusion. And what I realized this morning, the hype that I had is real, but it's really about one thing, and that one thing is just timing. And what this doesn't necessarily do is it doesn't necessarily give a true picture of, to some degree, it may not necessarily give a true picture of which direction. And I think that's a big problem. So you'd have to look at it from the point of view of anybody else, like anybody else would look at it and say, is it holding supports? Is it doing this? Is it doing that? Anyways, I have two things that I did find on the chart that we're working from this chart that we were working on GME yesterday. There's two new things, okay? One is pretty significant for the here and now. Well, I would say three things are very significant, aside from the overall concept, which could be considered like a fourth thing. What was the value dollar of $1? It's $2.26. Yeah. 0.36. So it's $2.26 and 36 100ths. I don't know, whatever you call it, 36 1,000ths of a cent. I don't know. So 2.2636, I believe is the right number. I'm not so worried about AMC when it didn't make any kind of advancement here, and I think it hit it like 4 times yesterday. I mentioned it. I said, what I said yesterday was that if it doesn't go up right now, it's probably going to go down for the gap fill because it's out of room. And that's not complicated. It had to go somewhere by Thursday was what was said. And you have an issue where you're kind of pushing against, I don't really like this time frame. Hang on, it's too small. On AMC anyways, you had an issue where you're pushing against a bottom repeatedly, and that was at like 296. And eventually you're running into the edge of the creek, which is over here. Well, you can't go anywhere else. Like, it's not possible. So right here, it has to make a decision, and this is going into Wednesday. It has to make a decision right here. And so what happened is on Wednesday, we actually dropped below that level, which would have been your sign of weakness. And then, unfortunately, it has a little bit of a fake out recovery, so it tries to jump back over. I'm not saying this is, again, predestined or predetermined or whatever, but it did back up and hit the creek and then sat there in the middle of the day. Now, by the end of the day, was it confirmed down? It would have been like barely, like the last few minutes of the day, maybe the last 30 minutes when it came back down here. So this is just a fake out to try to get people to think, oh, maybe it's going to hold and break out and go. And it did not. So it would have had to have actually done this, and it did not. So when we went up yesterday, I drew this marker on the chart because this was a level that needed to be broken if it was going to reverse and head back up. And the only other option here is there is no sideways in this particular case because this is a long-standing downtrend, and it's very unlikely that you're going to break that and just head sideways. It very, very, very rarely happens in the market that you don't get people buying in on a trend reversal. There are a few exceptions to that. GME has this tendency to do weird stuff like that where it kind of pushes out sideways from a trend. Very strange. To me anyways, I think that's strange. And it's not just a Wyckoff range that like just does this repeatedly while it's going down. It's really odd. I've seen it a few times on GME, but you know, other charts might do that, but AMC doesn't typically do that very much. If it breaks a longer standing downtrend, it typically reverses. That's normal behavior. So going into Thursday, this was like crunch time right here. There's nowhere to go. Like you've already pushed up against the edge here 3 times. This is the 4th time. So you might look at that as like a traditional cat ear kind of foretop. And so what you do with that afterwards, which we talked about this like crazy yesterday, would be you go back and you look at where does the wave intersection go. I just doodled it, and that's correct. This one's redundant. We don't need that line. And then we don't need this anymore. It's not going to really help us right now anyways. And we won't need this. Yeah, so you can see that there was an SOW right here, which is sort of a platform that we land on right at 291. So I had like 5 arrows yesterday pointing down to 291. I was like, if we drop it, we're going to just drop right to 291. Not complicated, y'all. Very simple because it's 5 cents away. And then also, that's the direction that the bears are heading. They're pointing there. This is the actual, I call it a wave cross. So it's the one that jumped over and then acted as support. So it was a resistance here in the beginning, and then it jumps over, acts as a support, and we push away from it and then drop down to it. This should seem kind of familiar. We did something similar on the big picture going to the Judge Zern decision. We actually had a very similar setup. It took a lot longer here to kind of make a decision because they really stalled. I mean, I titled it today Market Stalling because almost all of this price action right here is, I want to say nonsensical, but it's kind of like this could have made a decision way earlier. And it normally does. Like AMC is usually pretty quick to make a decision. But what we've noticed is since there's, it just is. Once it's a distribution, it drops and then it goes down. Like it's that simple. We don't spend a lot of time messing around. This really started back here at the end of February. And it's been going for about 2 weeks now, this kind of really slow churning business. And some people would probably look at AMC in this case and say, well, that's good, right? I mean, it's not moving very far, very fast. And my answer to that is, yeah. I still think that this is a stalling tactic, and I think that this is going to be a shallow S-curve. I don't think it's going to be a full S-curve. I've been wrong about that before, so if it is a full S-curve, we're going to head down to like 265. but I have a feeling that this may be a shallow S-curve, and we may actually get a reactive bounce as soon as tomorrow going into Monday. I don't know what that news would be. I don't know why that would happen exactly other than technicals here. But the creek is not far away. It's very close. And because we rode along it for so long, we're really not that far. Now, the more distance created, the farther down we go, the farther away the creek gets, then we're going to have some issues because your triangulation spreads us out, right? It's like a reverse triangulation where it's kind of widening. And the further down you go right now, obviously the farther you are away from the breakout. So it could take longer. There is another trend right here from the bottom on February 24th and March 3rd. That one, I don't really have any like strong feelings about it. I suppose if this has just dropped down to 265, that might be what I would expect. And like maybe we hit it here Friday. So I said it's like kind of the opposite, but really like if you look at where this creek is, the one that we just waved over, we're already hitting it. Like we hit it just now. So that normally could provide a support. And then if it doesn't, and we break through that, then it turns into kind of a middle scenario. So what you do is you look at that as, all right, well, it's a wave center. We've already crossed it once. If we cross it again, and this is kind of tricky, but you'd have to go back to, I think it's right here at $3. I think they probably just picked a simple number, like 3. I don't think it's like the 296 level, because this looks like the halfway point. See the 1, 2, and then the 3, 4. And it looks like to me it's distributing right above 3. And I would use that as like an anchor, and it should be like a 50-50 down to across this creek here, or this cross rather, down to the bottom at 265. Now, where did that number come from? We had used a couple different things to get it, but what we noticed was that back in the original S-curve and this S-curve, both of them were kind of pointing towards the same region, which was 265 to 270. So the first one reverses and has like an early bounce. The second one has not reversed and had an early bounce. I'm going to stick to my guns about it and say it will. That's my thought about it. I think it's going to do the same thing because I'm pretty darn sure that this is a second wave here and that it's not done. And this is the M cross between ear 1, ear 2. The biggest problem right now is that I don't think it really matters. Like it wouldn't have mattered if we'd gone up as opposed to down here, because in some ways, because to the upside here, like you would have broken up, but you wouldn't have been like bullish all of a sudden. You know, it wouldn't have been like, oh, now we're bullish. In my opinion, is like that ship probably sailed right at earnings when we didn't bounce back up. This particular setup is built on kind of a weakness. And so it's widening right now, but the top of that widening probably is 350, you know, and I don't think we're likely going to break beyond it. That's my opinion. If it goes beyond it, great. You know, we've got those targets up at 377, 4, and 426. The reason I said I don't think it matters too much is because, like, I guess I'd have to put it this way. When the quote-unquote cat ears develop, if you want to call them that, however you want to call it, that secondary distribution that happens, it's almost irrelevant, like, where they are. It doesn't make a huge difference, because in the past, we've seen that sometimes they're high, and the second cat ear actually comes above the first. And then other times they're really low. And it's tempting to say that, like, well, that's a completely different setup. What the difference is kind of like the bear trap versus the bull trap. Because when they're really high, and we do see this sometimes, that's usually a bull trap. And it's usually in order to kind of get bulls like to buy in some more, and then basically they're going to trade off more shares. So it's from strong hands to weak hands, right? Distribution. And that's normal. We do see that a lot on AMC, and then you get this nasty dive after. But just like everything else, like if we're in a downtrend, you can have a cat ear that's kind of on weakness, and it's a sliding cat ear, and it can have a recovery that doesn't really ever breach much of a trend. And that's, to me, it's the same thing, because even though like you might say, well, no, it's not the same, they're different because this is going down, this is going up. Nah, usually it's the same, because this is like a hook, and they're both hooks. Like, they do the exact same thing. They accomplish the same purpose. And at the end of the day, it's really about your interpretation of what you think a fractal is and all that crap. But this to me would be like the same thing. Like, it's no different. Because in both cases, your wave is not continuing. So like, could these both have like situations where they continue? Like, yes, they could. But that's the way that we see it when it doesn't break out. And then when it does break out, it's a cross up and over, and we continue, and this becomes a wave to the upside. And it can have a back up here and then continue. We don't need to get into every little scenario. The same thing here. This would reverse, and when it does continue, what we usually see is we see it push up higher than the previous at some point, and then holds above the creek and then continues. So for me, it's like, I understand like it might be a little bit confusing to say like they're the same thing, but I think they're the same thing. So when I look at this, I'm like, it almost doesn't matter that much if this dropped versus stayed where it is. I still think it's a distributive setup. Which isn't going to make you feel good if you're really hoping for like a huge explosive move all of a sudden. What it probably amounts to is we do get propped up into the end of March, more than likely. It's just relief, and then we're going to probably dump after, going down into April and all that stuff. You never know. The world is strange. We have a lot of tariff kind of stuff at play constantly. I don't know what possible news could make the market suddenly be like, oh, it's okay now. I don't know. Most of these negotiations are going to be probably pretty long standing. So I'm doubtful that anything gets resolved overnight. And even if it did, it's like he's got like I was talking about yesterday, the president has so many plates spinning with all these different deals that like, which one is going to catalyst the market, right? You'd be like, I don't know. Well, so what? He strikes a deal with Canada. That's a positive. He strikes a deal with Mexico. That's a positive. He strikes a deal with the EU. That's a positive. But who knows, right? How long those are apart from each other. And individually, they may not be as enough. And that's kind of what we saw here yesterday, is that we got a pop in the market yesterday because CPI came back and it said that inflation is, it is, we did beat the numbers, right? And like inflation, this idea that like we're going to be stuck forever. Yeah, we're going through a lull, but it wasn't bad, right? And that did prop the market up. One of the ones I was looking at was Nvidia yesterday, and I was cautioning like about this area, like probably not a good idea to buy in just yet. Really big volatility drop and then hike this morning. This drop and hike this morning, I think, again, mixed bag. I would suggest that, I'm indifferent about it right now, but I would suggest that you wait it out if you're going to try to play it, because it finally got to this trend and it broke through it. It could be a hook. It's tough to say. This is a weird one. This is technically kind of distributive. See, it made like a weakness. It pushed up higher than the previous top, made a weakness. So then I would think if it did that and then went up again, that this would be what's called a UTAD, up thrust after distribution. But there's a positive catalyst coming up for Nvidia on the 17th, and they're expected to have some big news. So it's kind of hard to say. Maybe that's going to be priced in. And the way this is chopping just doesn't give me a lot of confidence. It really kind of becomes, so like by itself, this move this morning would have looked bearish to me. We'll see how it plays out. It did make its way over to that trend and break it after touching it this morning. But it's holding, some of these EMAs. We'll see. And at the end of the day, it kind of to me just looks like a rising flag now. So it's unusual. When we look at stuff and I talk about Wyckoff terms, you have to take into consideration that Wyckoff is very much about sideways ranges that do particular things. It doesn't always talk about things like this. There are schematics for pretty much everything in Wyckoff, but just something to make make note of. Like it's one way of understanding the market. It's not the only way to understand the market. It's a great way to understand liquidity. It's a good way to understand what a liquidity test looks like and what that might bring afterwards if you can observe the volume. But yeah, I mean, this is a rising flag. I don't know. You know, is it possible that it's bonking its head against 117 and then breaks it all of a sudden? Sure. It's also very possible, again, that we're kind of developing into a breakdown here. And there's sometimes where, again, in the market, it's like I can look at this and probably make an argument both ways. When we're back here, I'm not very bearish, and I wasn't. And going into Tuesday, Wednesday, I'm like, it's going to probably be a pretty bullish pop Wednesday. Now that we're here, I'm like, they left a gap. There's a catalyst coming up, but we've got a few days. There's definitely time to go back and get it. Right now, it's pressing up against 117. I think if it broke out above 117, it's likely going to make a leg up and go all the way up to 126. But like I said yesterday, I would just caution because I don't think, and it's happened 1, 2, 3 times. This will be the 4th time going up, where you may have been like, it's time to go, and then it really wasn't, right? So I was like trying to caution yesterday that, hey man, this is probably not a good idea to just jump in this right here. I'm glad I didn't because it's been just chopping until it makes a decision. And a breakdown in this case probably is a drop beneath, at this point, like 114, okay? That's a good metric for the market right now. I think Nvidia is one of the only green ones I have on the chart today. And coming back to AMC, I think about it in like the same terms. Like there's a very real bullish divergence here on the hourly. You can see that there's clearly like been pressed down to try to get this lower, but we haven't yet really broken down yet on the hourly. And I think the MACD is probably the same. I haven't really looked at it very much. A lot of these indicators turned down this morning. Obviously, when you went for that gap fill, that's totally normal. Wouldn't have expected it to be otherwise. But volume is strange here, and I did want to mention this. So I do think volume is probably the most important indicator in the market. And this is a very odd volume. It's comparatively extremely low. And usually, as you can see, like for example, back here, so on this big dip down that we got, this big flush down to 325, you can see that volume right there. This is more typical of like a selling climax. And this was back on January 14th. And ever since then, we've not gotten a whole lot of great selling climaxes. We've had like one area right before earnings, one right after earnings. This is not particularly high volume at all. Again, I think it's just a testament to the uncertainty of the market. Like even down here, I think they're getting, I'm talking about bears in this case, they're kind of getting a freebie because there's not really a lot of stopping volume here at all. And it's strange. This right here, this heavy volume comes out of buying and selling. When there's this heavy spike on the bottom, right? Even if it's a red candle, it still implies that there's an extreme amount of volume that is both ways. And when you don't have that, and you just have this kind of like light push down to a level, it's like, well, where is it? Either it's not here yet, and we're waiting for that to happen, or it's not coming, and you're going to be waiting for a long time. And I think in both cases, you just want to kind of take a step back and look at the bigger picture. This was a cross down again. We knew this already because you can see it on the pattern that I drew on the chart right here. So we knew this was going to be an S-curve of some kind. Could it be shallow? Maybe. Hard to say. It's already made a weakness here. It already punched below 295, 296 yesterday. Made another weakness today by punching below 291. You don't want to call it that? I don't care. That's fine. I'm going to call it a weakness because that's what it is. Because at the end of the day, when you look at the grand scheme of this thing, the huge schematic, this is a test of the liquidity floor that we had back when we took off in May. This was a shelf that was built on strength. It came up. It was probably one of the most bullish things I've ever seen AMC do. And yeah, and at the end of the day, it took off from 291. And so when you go back and you look at where that shelf is, us pushing down into it, yeah, on low volume, it just kind of like somebody sticking their pinky in the water to sort of just check the level and see if it's going to be good. And so what does that mean, Mooksy? Well, it falls into line with what we normally see on this kind of a midway point, or like again, a liquidity test before a dive, just like we saw here on the micro. The same thing would apply on the bigger picture. It's not mutually exclusive, of course, but I also think that sometimes we sort of forget that the same principles apply. Like this particular little punch through right here yesterday, around noon. Well, it was earlier, maybe a little bit earlier than that. That particular punch through is the liquidity test. And see, then it's brought back up before it comes back down again. It's brought back up in order to kind of enlist some more sellers to punch through that wall. Like it's time to go. So what I'm looking at right here is I'm looking at a very similar idea that like, yeah, this is probably going to be a bloodbath before it gets better. But again, this is the dip. And when I look at this as like, oh, it's dipping beneath and it's going to rise up and then come back down. Does that work with what we've already established as likely here with a pop and then a drop? Yes. You know, this in theory, this idea right here could frankly happen right underneath it. You know, I had drawn it out pretty high. It could be that, yeah, we still get up there above, but if it got stopped below, it's really not that different. In fact, in some ways, this actually looks more like the small picture, doesn't it? Because you're getting a press up against that creek that just doesn't go anywhere. And that's what we saw here on the small short-term picture, really short-term picture, was this stalling tactic of like, let's just press up against the creek and fake out bulls constantly, right? So you can certainly see how something like that could easily be playing out on the big picture. And yeah, at the end, you're like, well, shouldn't it go all the way up there? Yeah, it might. It might still have like a big rally. I don't know for a fact, right? And frankly, I'm not going to change my chart right now. I'm not going to change the blue lines. But yeah, of course it could, because this is still like a level that's being checked out, right? So it still could have that massive move, but sort of originate from a place of, and maybe it is on April 2nd. We're kind of assuming that it goes up and then drops, but maybe April 2nd ends up being the catalyst date. You know, something changes and everybody's expecting it to be bad and it's getting ready to sell off. So it pops a little bit and then drops back down into April 2nd. And then maybe it's a catalyst to the upside before it's like, okay, we're going to go down, you know, for real. The rest of this still kind of fits in the same spot, so I'm not going to change it. I'm not going to do that. I think that we're still looking at this pocket up here as a possible high, which is unfortunate. That 335 area really sunk into my brain. And I think that that's going to be used in correlation with what I think is a larger wave, which is really more important anyways, which is this one. And I think this one is going to be a little bit more significant in the short term, as we see it'll probably have like a rebound and try to get back up to here again. But again, because we didn't jump up earlier, we sort of lose the track. We're on a different train track, so to speak. And unless you jump the track, you're not going to be going up significantly high, in my opinion. So when I look at this, I'm not particularly concerned. I'm just sort of thinking about it in the back of my head that like, well, it may not come back up that high, which is unfortunate. And it may be one of these things where it's like a really quick pump and dump. And again, it would not surprise me one bit to have this happen almost all at once. Who knows, like maybe on April 1st or April 2nd, and there's this kind of ridiculous sell down. So I was asked, where's that level at? I think it's 226. Here's the way it happened in 2020. All right, in 2020, we came down and we hit the gap fill, and we actually went below it. So it was a bit of a weakness again. So in 2020, we punched below the gap fill. That happened to be right in the same spot on this particular blue trend that you see here. If you go back to 2020 and you look at these parallel trends from bottom to gap, it's like the same distance. And what happened is we didn't quite get there. We didn't get to this blue line at first. We got just to the gap and it actually punched below it. And then there was an earnings report and elections that year, right at the same time. That was in 2020 in November. The market rallies and pretty much started into a new bull trend at that point. AMC, however, was already going up into a bull trend. AMC, however, was like struggling. It did not catch up. It used that opportunity, and what we had talked about here was that it would have been 1-to-1. It would have used that opportunity to come back up to $4. And yesterday, the guy who's on here was giving me flack about $4. I think one of the things that we fail to recognize is it's not like that level was something I made up. It was a really simple, this is almost one of the simplest pieces of TA that you could have, which is that this is a level that you drop down from. We have yet to come back and retest it, which is okay depending on what you do. Because, I mean, sometimes the market is controlled by these big operators, these huge hedge funds that have tons of money invested in things. Sometimes they set up levels, and if it gets there, it gets there. And if it doesn't get there, they don't care. They've got, straddle positions or whatever you want to call it, where they're basically setting up like lows and highs, and they don't really mind if it doesn't get there. They just don't want it to go past that level. I would have no doubt in my mind that that was the level, and you can see that there were multiple tests on it over time. This is the last time we touched it was on January 7th. So naturally, I think this curve, the curvature of the cat ear, this distributive action would have been to come try to get back towards this level. I think that's the reason why we were seeing trajectories heading that way. I don't think it was just me. Like, I don't think I was just making stuff up with my own like ideas or whatever. I think it was pretty straightforward. And that's what happened in 2020. You got a rebound, it pushes up, hits the top, it doesn't break the creek. It does push over like the 200. People talk about like the 200 SMA and the 180 EMA. It pushed over it in 2020 on that push up. I don't know why people think that that means it's definitely going to break out. I've heard that too. I respect the technicals. I do. I think that there's a good chance, yeah, if it jumps a big EMA, it could hold it. But it was used traditionally, it's been used on AMC and maybe on GME to some degree as a distribution level. Like, that's where you sell off. You get above it, and that's a bull trap. And that's kind of what we see back here is like we're piercing above it and then selling back down through it. So in 2020, it pushes up above those things. It would be comparable. You would say that it came back to this $4 level, period. Is this not high enough? Like, could this be high enough? The short answer is no. It's not high enough. Because a liquidity level is a liquidity level. It's not like something that you can just be like, oh, it's close enough. No, it's not close enough. It didn't go there, period. You know, like it should have been up here around 4 to 412. But I was also thinking today about how like I say that sometimes and I'm like, maybe that's a bad word to use because the same could be applied to the whole market right now. Saying it should be doing this. The market should not, some of you guys are going to disagree about this, but when you look at it, I believe, and I'm looking at it just fundamentally, the market should not be where it is, fundamentally speaking, unless GDP comes back and it really is like a recession and all this other stuff, which by the way, apparently we already were in a recession. Remember President Biden like changed the term to make it seem better like we weren't? You know what I mean? Like it's already been happening. The market has priced in a huge drop here. This is a historic drop in the stock market. It's historic. It does not happen very often. I was looking at statistics and I was like, really, the 10 to 15% drop happens every three to 5 years. The 20% drop very rarely happens in the market. And even more so than that, when you look at all the major indices and like what's been going on, this is a big drop. For what? Tariffs, many of which probably won't stay in place. Fears of a recession. It seems like we're trying to predict a lot of things, is what I'm trying to say. The market's trying to like price in bad news that hasn't even really come to fruition yet. Like, we really don't know how tariffs are going to affect the economy based on one thing. Some of you guys are going to be like, yeah, we do. We know. Well, economists will say one thing, and then we'll see. You're just trusting, like, you're putting faith in something that you don't ultimately know the outcome of. And so the assumption is that rate cuts are being stopped because inflation's sticky. It's not transitory. And then we keep seeing stuff like, oh, well, CPI is not that bad. And it's like, it's come down. So what's the deal? We've got people saying, oh, GDP is going to be bad. And it's like, yeah, but that's already been like an issue. It's slowing. Slow growth is not no growth. It's just slow. Yeah, but it's going to be really bad this time. Maybe. I don't know. I've seen nothing but people beating earnings. So it's like, in a market that's healthy, you're looking at a growth stocks, you'd be looking at earnings. The earnings are completely going against the trend right now. Aside from maybe your Tesla, right? Or some like outlier, Apple to some degree. But even the Apple like blew the earnings out of water. People thought it was going to be horrible, and it ended up being okay. Like, it was fine. Not good enough. That's what I hear. It's not good enough. Nvidia didn't do well enough. And I'm like, okay, but is it worth $100? Some people think it is. I don't think it is. I think it's worth way more than that. Like, way more than that. But some people think it's worth that much. I don't know. Some people think it's worth between 90 and 110. I've seen some analyst targets that are pretty low. But most people think it's worth more. And that's kind of like the theme here is like, you're going to go back and see like, oh, there's a double beat on earnings. And then we slumped like 15% or something. It's like to some low that we haven't hit in over a year, on a historic scale. It's like, that's crazy. I can feel it in my bones right now. Like, I can feel the frustration in my bones. Like, I can feel like man, this is going to turn, but it's probably going to be ugly. And when it finally does turn, I think a lot of this market, unfortunately, and I'm hoping it's not me. I got to be honest with you guys. I'm hoping I don't get caught in the crosshairs of something bad. Because it's likely that a lot of this market's going to be liquidated and out. And it's going to be turned around before people think it's turned around. It's already going to be going. People are going to think it's still bearish, and that's the way it is. I've been kind of beating on the same drum that I think we're going to get a prop into March and then probably dump. I don't think that's unreasonable, and I found an article. I wanted to share it with y'all. There's an article that I found that was pretty interesting, and I didn't know that this was even a thing, so I thought it was really cool that, again, just getting some more information. And it was called, I got it on Yahoo Finance, but it's a Bloomberg article. So I'm not sure if they like reposted it or how that works. Anyways, so this was posted March 11th. And so this is a Bloomberg / Yahoo article about the market. And essentially, it says that a huge option position expiring at the end of the month, that would be the end of March, is giving some people on Wall Street a new level to fuss over. Now, this is fascinating to me because I had found this level just doing technicals, which is around 555, okay? Now, there is a clear and obvious reason for that. If you go back and you use the previous tops, there's obviously one right there, but that widening that we talked about on stream begins kind of in that pocket. So it was already there, right? But this is interesting because this is about options. It says the JP Morgan Hedged Equity Funds, which is JHEQX, it's a mouthful, which uses put options to shield against drops in the index, holds a long position in the S&P 500 put options at 5565 as part of a collar position that is rolled out at the end of each quarter. The current collar, which also includes short positions in 4,700 puts and 61 100 calls potentially adds to volatility, according to derivatives strategists. Sorry, I'm going to read better. Though is expected to prevent a deeper sell-off. That was the case on Monday and Tuesday when the S&P 500 briefly dipped below that level before bouncing back. The S&P 500 only closed below the long put strike of the JP Morgan collar trade once in early 2020 during the height of COVID and never closed below that level at expiry. According to Brent Kochuba, founder of options platform Spot Gamma. It's a pinning point, he said. The S&P 500 could test 5,500 and then bounce into the end of the month before the reciprocal tariff deadline on August 2nd. So this fund holds a basket of S&P 500 stocks along with options on the benchmark index and resets hedges once every quarter. The fund aims to let investors benefit from equity market gains while limiting their exposure to declines. Once the option position is rolled forward 3 months out, their influence on current prices should diminish. Now you can keep going and read more about it if you want to look into this article. Again, it's called S&P 500 Slide Brings Huge Option Position to Rare Focus. I thought it was a really interesting article, and it almost seems like I might have copied the idea, but I didn't. I just was looking at this as a creek and where these intersections were. And I was like, well, it looks like that's an intersection that's probably not going to be passed over. So the idea there would be that, again, it's not necessarily going to be great. He doesn't say that there's going to be a huge bounce, but the idea would be that you would potentially not close frequently beneath 550, or it's unlikely, because that whole fund designed to prevent, the way they put it is to prevent too much of a market sell-off, but to me it's a hedge, so it's probably there to prevent their other portfolio positions from sinking too far, because they make promises about, hey, you can buy these things and you won't lose XYZ amount of money. So that's the amount that they're willing to lose and no more. And we're right there. Now, I'm not saying JP Morgan's going to prop the market up, but if they have, a multi-billion-dollar, and they probably do, I don't know the numbers of it, you can probably look it up, position there to stop the market from bleeding out. I think it's a decent number to pick at. When I look at the overall trends here, and you can see on the daily chart here, I'm just kind of poking at this. There's this is the S&P, okay, that we're looking at right now. So it's the ETF of the S&P 500 SPY. So the levels are not 5,000, they're, divided by 100. So you look at that and you say, okay, well, it's not even broken out yet. No, but it is severely oversold, and it's been oversold since March 10th. So for the last few days that it's been oversold, it's been right in that region where that hedge is. And I think that's important. Again, I don't necessarily think it means that you're going to want to bet big on the market, but I do think this then logically leads to a pretty succinct rebound. And I was being fairly bullish when I said that I think we can get to 577, maybe even 583. In reality, this level here, right beneath 575, may indeed be a pretty big issue. And also, in reality, there's another trend coming down that I look at as a 50-50, and I'm seeing that right now here. And I've already drawn the line down through it, but I drew it down according to an S curve. And when you draw it to the low here, it's getting closer and closer to this mark. And this to me looks like a downward bear wave, it's kind of already in development, right? So there's a curiosity there about well, why would you even jump that? You may not. So this could lead to what I would say is a lower position again. And this kind of what we saw in AMC. It's you're kind of putting yourself into a box here because of the nature of these continuous slides, the lack of those V-shaped bounces, which, the market gets spoiled with them, right? Boom, and it just goes. This could be a situation where there's a steadier rise that doesn't really go very far. You may only hit 575, and there is the daily 180 is right there now too. So unfortunately, if you look at it that way, it's yeah, there's a potential bounce here, but it's not that big. Now, I've seen some people call out 10, 15% bounces. I've seen some people say that they think that the market's going to bounce that much right now. I've seen other people say, well, it's probably going to happen later in the year. They don't expect it year over year to be a decline. necessarily this time, but I think that's all speculation anyways. And every single analyst that I've looked at has been kind of different. Another thing that kind of bothers me, about the attitude that like, well, you're not perfect. Well, nobody in the market seems to fully agree on this. So and we're talking about analysts from like some really major hedge funds. That Tom Lee, he's really big name. I think he's the Fundstrat guy. He seems to think we're going to rally like 15%. He thinks it's going to be a huge recovery. I'm skeptical of that. I think that's a bit of a what if. And I've heard other people say they think we're going to go up, make a new market high before dropping. 15%, 10 to 15% is basically, again, new market high. That's like right here, 11% up to 15%. Is it possible? Sure. I mean, we've seen this happen on these kind of drops before. Like if they're really severe, sometimes we get these big V-shaped recoveries. It happens. It certainly wouldn't be the first time. And so I can totally understand where they're coming from. I think the difference this time is that we're not, I don't see it as exactly one-to-one for a number of reasons, but I'm not really sure, because there'd have to be an obvious push over certain levels. And like this is so severe that, yeah, if I use my normal like V-shaped recovery method here, it's super straightforward. You'd probably be popping up back into March, right? Well, yeah, sure. But, you look at March into April as like Q2, and like the fact that most of the time that's where you're repositioning. I think there could be a buy-in period here in March as a result, which is great. But it makes me kind of question the idea that, it couldn't come lower again. There's so many other targets that we could easily come back to and retest if it fails right here. So I'm skeptical of that. If you think that's going to happen, I'd love to hear from you on the Discord. Please come share your TA with me and let me know what you think, because I'm not really sure I see it. I might just be missing something. I'm having a lot of trouble seeing how we get past 574 and 583 if market news stays kind of sour. Like I'm still seeing this as a more likely as just a bounce. Like a good bounce, 4 to 5% bounce, but not a full market recovery bounce that just keeps going up. So, yeah, let me know your thoughts. If you have a connection on our Discord and you think that that's likely, then let me know what you're thinking, because I'd love to know more. I just find it to be a bit difficult. So, yeah. You were talking about something affecting the market April 2nd. Trump said this day. Yeah, that's one of those things. It's one of those things that I don't know why that happened. I think somebody always knows something, right? When that kind of stuff happens, the news just kind of happens to be there. I don't think that that's unique to me. So if you're thinking oh, wow, this is unique to Booksy calls these dates or whatever, this happens frequently, where I'll say I think there's some kind of a catalyst event, but I don't know what it is. I got to be honest, I don't think that's at all unique to me. I read a lot of newsletters, and the guy who's the vice president of Zacks.com, he said something really similar to that, which is really interesting, I thought. And he's an older dude. He's been in the market a lot longer than me. But he was basically said something along those same lines. He said, usually when we need the bounce, the news is there to pick it up, and it's just there. It's just the way the market works. And I think that's just part of the market. People are very aware of the manipulation, or so to speak, of the bigger players in the market. And there's a lot of people who are really just waiting on the sidelines for those bigger events. And usually the news is, I don't want to say the news is late, but usually the news is kind of late, Good news is often priced in, bad news is often priced in. But then it's there, there's often these catalysts that are there to drive the market forward. So the triangulations I was seeing towards April were probably on somebody's radar. They may not have known. I'm talking about big money, okay? They may not have known exactly what was going to happen. I don't necessarily think they have a direct line to the president. That's not necessarily the case. But I do think that's probable. Like, why not? If most of the market rides on sentiment, if most of the market rides on, and we were talking about this the other day with like FANG, I think. Like if you look at it's really weird. If you look at I took 5 different analyst targets and I put them on the screen here. And that's weird to me. This right here. Like the fact that there's a really clean 50-50 bracket here that's almost perfect. It's like bizarre, right? So either they're all like talking to each other, which is, yeah, and why not just pick the same number? Or everybody's kind of feeling the same thing, right? And if you're analyzing the stock correctly based on fundamentals and all that stuff, it's like, well, yeah, it should be in this value range, and then there's a width around it, yada, yada, yada. Some people think it's going to be higher than that. Some people think it's going to be lower than that. That's kind of what I'm getting at. I feel like that's probably what was going on with this April, end of March thing. And the fact that there's a quarter end, we're talking about the quarter system a lot right now. That is very, very important because we did see that in IWM especially. If you guys remember, man, when was that? It was, this is not the right one. It was in 2000 and it was last year because it was when AMC rocketed. There was a lot that happened in that March period, March, April. And specifically, was it really just 1 year ago? I feel like it was longer than that, but yeah, notice that when you get up to March, look at where we are. I find this to be endlessly fascinating myself. Because if you think about it, if they're rolling year-over-year positions or something like that, that's one thing. But this is the first time in the year that the quarter system rolls over, right, to the next quarter. And so oftentimes in March, you get sell-offs and buy-ins in order to kind of rebalance your funds or whatever. That's what I've read about anyways. I don't know how much of that is 100% true, but that's what I understand about it, is that there's a lot of rebalancing that happens in March going into April and stuff. Well, look at where we are in March of 2024, and then take that into consideration with where we are now, which is pretty much the same spot. I find that to be very interesting. Look at where we are in AMC, right, versus where we were last year in April. It's basically in the same spot. Everything kind of came back full circle. And if you think about it as like a year-over-year position, that really means that if you had bought in over here and you never sold off, which is unlikely, but if you had bought in and just held shares to like lend out or do whatever, you're really not losing anything here, it would be just the same position. So a leap from 1 year to the next, March to March, would have yielded nothing particularly, except that maybe you would have held those, or just a long position. You would have held that setup. So I think it's interesting. That may be the reason why we might experience kind of a bottoming area here with the potential for like a bounce and then a slightly new low. Makes sense. There's also this creek that was established around the same time. If you look at April, this is April 2nd, April 1st, April 2nd, right here of 2020. So that's, again, looking at a very similar time period. Look at where April is right here, right? It's at 211. This is where it was here on April 1st, 2024. It's at 211. Look at that level zone that we're thinking that we might bounce into. It's really similar. Now, I'm not saying that they're going to be one-to-one or have like a perfect 1 year date out, but it would make sense to me to some degree if you think about the positions changing hands and then kind of resetting every year, that there could be a rebalancing. If the market's unsure about where to go, you just go back to where you started, right? And this is the consolidation that we made, and it really is a consolidation here around 200. I would say 200, maybe up to 202 would be that consolidation. And then everything below that would be like dipping down for liquidity. And what's even more interesting is then you can see on the IWM that year over year, that's the trend that was started in April. And like, look at where we are now. We're kind of pushing right down towards it right here. So you're saying that we're going to hit 195. Maybe. I don't know. We may even hit below that. We may hit 193 or something at a later time. I'm not sure. Maybe we just double bottom off this 195. Maybe we go lower. But it would make sense to me to go ahead and have a bounce, right? And go back up and retest this floor that we left, again, kind of like AMC did, starting off in January. If this got up to 214 at least, it didn't even like breach the edge of this creek here, which is, by the way, a channel down, right? 1, 2, 3, 4. If it at least got up to that 214, it would be retesting the floor that we made in January, which is similar to what we're arguing here about AMC. It may seem like a completely different argument, right? But there's two different floors. Like, so in January, there's one up here right around January 3rd or January 1st, which is at 390. That's really close to the original targets that we had. There's another one right here around the 13th, and that's at 325. And this is where I'm kind of like, oh, you know, this is why I'm like concerned. We may not end up breaching this level right here. If the back test on IWM, if it were proportional, okay, and I'm not saying it has to be, but there's two different floors here, right? So same thing for IWM, is no different. So this is the January 1st area. It's right here at 220. I mean, this is literally the two levels that I had marked off right here. So at 220, that's the first. And then the second level would be way down here at nearer 214. That's the second. So you can see like there's a synchronicity between not just what we see locally as like, hey, we need to go back up and retest these levels. The market's super oversold. But also what we see year over year, like going back and kind of resetting the levels that we're at, chopping back through here from what's the low here on this little March area. So March starts at 250 cents. The low, and it's really interesting to see that double move right here, like right at the beginning of March, and then there's an up down move, and then a new up down move. And this is what propels you lower. And then look at the wraparound that happens. It just continues to wrap around the same spots, throwing the price down low to try to get to the lower end. I mean, you can see it pretty clearly looking backwards at that liquidity zone right there. So the beginning of March starts at $20 roughly, and $200.50, for example. And then we whip up and down and up. We go as low as 197. We go as high as 210, right? We do consolidate in that period for a while, and we eventually dip down to 189. Again, I don't think it's out of the question that we could come down like pretty darn low here. But all things considered, it definitely makes me wonder, you know, if that's what we have in mind here, is like we're trying to get back up to retest this floor, which would make sense to me, and or at least retest 211, right? And that place would be sensible. So anywho, I was kind of looking at this and I was thinking about how, you know, it stinks to be down this low, but everything's kind of coming year over year to the same spot. And I think what we would want to do from there is kind of build out a foundational move. And this again reminds me a lot of 2020. So I don't want to beat the same drum, but if you go back and you look at this model right here, this 1 year accumulation, potentially accumulation, could be distribution in the end, we'll see. When you look at that and you compare it to what we see here, it's like very similar in some ways. If you go to the area here around March, right here, March 3rd, 2020, and then look over here at March 2021. So here's March 2nd, right? Let's just do that March 2nd, and then here's March 2nd. Nothing happened, right? Like pretty much. There's barely any move year over year. That's pretty wild. So when you look at that, I'm like, oh, well, maybe there's something to that because clearly, like, there's a rebalancing happen. And it's cyclical, right? I mean, you're basically back at the same spot. If you kind of fudge it like a little bit more, you can kind of take this value and go back to, let's say, January, or you can go to February, whatever you want to do. It doesn't really make a huge difference. It's all in the same pocket, right? We're talking about year over year. You're really returning back to the same zone. And yeah, this does a lot of other things too. It does. But one thing that I'm just kind of like pointing out is that in this particular case, it was bullish. I don't know for a fact this can be bullish right now, but it is interesting to see that return, and especially here when you look at what happened in 2020 after that gap fill here, and there's that reactive move back up. This is really just the second year, and I mentioned this before, but it really is. It's the same principled idea. It just looks really ugly by comparison to maybe the one we're at now. But this idea right here of that I was pitching yesterday, that really this is like the sagging cat ear here. It's the same concept, right? So the pump before the final drop, when you're kind of get down to those new lows, it is sensible. It makes sense. And the bigger difference, I suppose, right now is that the market on the whole seems to be doing it, which could unfortunately bode very not well for AMC. It'd be really a bad thing for AMC because AMC has a tendency to outperform on the bearish side, and we may be in for a bigger sink than I'm even expecting. But it would make sense to me that after getting this, you have a pump up, and yeah, it could still go up. I don't know if it will. It could still go up to near 4. It's the right level, but I'm more inclined to think that at this point probably stops at 350s at most and then comes back down. And that's when you come back down and get to the new low beneath 241. This sets you up okay going into May. And I know a lot of people are expecting a May-June run. I don't know what it's going to be. At first I thought it was probably going to be just like January. And why not? I mean, we have this kind of macro picture of like 1 year, year over year. If this kind of builds out and then can break out, sure, like it could be huge. GME is making me kind of rethink that a little bit, just a bit, because I was doing this diagram yesterday on GME, and I'm coming back around to it now. I talked about it like first thing on the stream. The importance of it will be understated at first because I think that it's a bit odd, and we're probably gonna be like, okay, so it's a big nothing burger right now. Maybe a little bit, but what should come from this is something I think that's really, really important. But I have time to work on it, and I don't think it's done. So I'm showing you something that's incomplete. I worked on it like 2 hours yesterday, which is great. It doesn't mean anything. Doesn't mean it's great. It just means I worked on it a lot, and I worked on it today this morning for a couple hours to just tighten it up. I learned a few things, and I know I said I was going to talk about it, and then I stopped talking about it. I learned a few things. One of the things that I learned was that if you make them the same, because yesterday when I did it, I didn't make them the same. I had the waves going, and they were actually at 2 different middles. Both could be true. Where what I mean is that you might have a situation where you don't actually have a perfect kind of equilibrium where they have the same center. I don't think that's impossible. I don't think it has to be perfect in that they both have the same center. But when I tried it with this particular stock on GME and looked at it, it looked pretty darn convincing that it was the same center. One thing I want to note is that the bigger wave here, if they have the same center, right, and your weight, let's say it doesn't matter if it's an up or down motion. Really, both of them could be the same, because you could flip this over and it could be a downward motion with an upward pull that doesn't quite go right as well. So you can flip it over, totally understandable. It doesn't really make a huge difference. But regardless, no matter what you do, the first wave that you build out here, which is the bigger one, is bigger. And therefore, if they share the same middle, this wave is going to end. It starts before the second wave and it ends after the second wave. Why does that matter? I'll tell you why that matters. This would imply that if, again, it's theory still, so it's a hypothesis. This is not a true statement necessarily. It could one day be proven to be true. Sometimes I get those things and it works out. Sometimes I get them and it doesn't. But what in theory this would mean is that you basically have a build out model that's pinning a bear date versus a bull date. And if they're not at odds with one another, it could very well be a rotational motion. And so that's what I see here. In theory, what this would mean is that if a cat ear, because that was the idea here, was like this is the second cat ear. If a cat ear breaks down first, it could very well be a spring motion, right, that then reverses and heads all the way back up to the top of the range and then breaks out and goes farther. Okay. Well, sensibly, this actually works quite well when you look at the squeezes that have happened, because there is something similar that goes on back here, where you basically pass from a low point. So you're nose diving, right? This is a gigantic cat ear. So before you get all mad and say like, well, it's not going down to $6 or it's not going down to whatever, just remember that like this is very normal for the market. It makes bottoms, makes tops, makes bottoms, and it has to ultimately break out somewhere. And there's really only two options in Wyckoff in a breakout mode that's bullish. One is an LPS, which is in the middle of the range. It doesn't go to new lows. And the other is a spring, where it goes back and it retests new lows. That's it. And why not? What else would there be? There would not be another scenario. There's no other scenario. Like if it's going to go up, it's got to make a bottom somewhere. It's either going to make a bottom in the middle or it's going to make a bottom lower. Okay? So there's two possibilities in the current time frame. If it's going to go back up and retest all-time highs, you would say that it's either got to make a bottom in the middle, which is kind of trying to right now, which is a possibility, or it's going to go down lower, period. Okay? When I look at this, I want to be as unbiased as possible because I think there's going to be a tendency for GME folks to be really bullish all the time. And when I'm unbiased about it and I just look at it realistically, to me, what it looks like is that this pump up was a breakout of this that pretty much hit its target already, was a breakout of this triangle. But ultimately what it did is we came back up and we bonked our heads so far on this floor that was generated back here in the very beginning in 2021. And we last tested it, started in April. There's a curiosity to some of these dates on the screen, and I'm going to get to it in just a minute. And they're pretty interesting when you start connecting them. I was extremely surprised at the results. Okay? Let's just put it that way. I was very surprised at what happened when I started using them in connection with one another. And I'll get to that. These are the quarters right here in the middle. And that's part of what makes this kind of interesting today. So I was looking at this and I said, okay, so it looks like it pumped up and it's trying to do that thing, but this definitely looks like a cat ear. I mean, it's a double top push. It's struggling to kind of get back above 37. Anybody who knows anything about supply and demand levels would say, yeah, it hasn't yet broken out. Because ultimately, even though this did jump a creek, it's bonked its head on a supply level and has yet to pass it, period. It doesn't matter if you think the market's going to squeeze and it's going to blow past it and you have the utmost confidence and faith in anything. It doesn't make any difference. The facts are very simple. It hasn't gone yet. So normally when I see something like that, I would be assuming to some degree that if it doesn't go right here, that it goes back down to the creek. This is no different than anything I do anywhere else in this market space, and it almost always pans out the same way. Okay? the ideas of, oh, we didn't advance, where are we going to go? It's always back to the creek that you jumped. And we did not test it, all right? I know that people want to be like, it doesn't have to kind of thing, or breakaway gap and that kind of business. Breakaway gaps do happen in the market. This could be one, for example, but that's a breakaway that doesn't ever come back and fill like a gap way down here at $1.38 or something, right? It took off, or a gap down here, wherever it is. There's another gap at like 450, okay? It may be that it doesn't fill those in the future, but at the same time, you just have to take it for what it is. I'm not trying to say what it should or shouldn't do here necessarily. I'm just saying that's where the level is, period. All right? So if I'm looking at this and I think this is rejecting, the next stop would be like $6. And that's really low. And it seems so low that it seems almost impossible, because you've heard people call out like 17 or 18 bucks. And I'm like, I don't think it's going to get there right now. And it didn't. It didn't get down that low. It got pretty darn close. I think it got down to like 18 something or 19 something. But two people were saying it's going to go down to like 16 and 15s. And I said, I don't think it was going to do that right now. It would need to at least come back up again to distribute if it does come down. And it did. But that leads to the question of like, well, then what's going on with this May, June run business? Because this is not May, June. This is October. And you're like, well, that's just your chart, Booksy. It doesn't have to be right. No, it doesn't. It doesn't have to be right. But when I did the measurements, I did it again as precisely as possible. This is very normal. The fact that we came up to here and hit this level is kind of a confirmation that this is correct. And there's like 6 wicks down here that like match it. There's like 6 candles rather that like match it. And that trend trajectory would be the cross down. Like this is normal. This is what you see on any of these. You can see it right here on the RSI. Like it's definitely the level. And so that's the wave up. And when you look at the wave and the interaction of the wave with, it's kind of amazing when you look at the interaction of the wave through the middle, how this wave has been. And if you look at where we are, it's actually holding up above it right now. It's floating above it right now. It's trying to hold it. I think it's correct. I do. What's even weirder, and you guys say whatever you want to say about me and my methods or whatever you want to say, but that doubled equals March 2nd, 2026. Now, I don't know how many of you have been around for this past year frequently, but you know I've been talking about that February 2026 date a lot. This keeps popping up. This is a locally could be argued is an intersection as well of a very, very important new trend that was created here. I don't want to say it was new because it was really really was 2003 to 2000. It was a 10-year wave middle that we left. Now, does it have to go back and check that ever? No, it does not. Because technically, like, this doesn't have to be a wave middle at all. What if it ends up breaking out and going beyond it? Well, it's not impossible. I think it's unlikely, but it's not impossible, because if it's a wave middle and it keeps itself a wave middle, then sure, it could break out, double it, go to $19,000 or something ridiculous. I don't think that's likely going to happen. The main reason for that is I think what happened in this whole shebang is that they actually established a new center right here at $10. And that was done when it popped here from the bottom to the top. They divided it in half. They did like a 50% marker. And they chose to use certain things back here. And I think that middle is actually around $16 up to where we are now, really is right on it. We're kind of sitting right underneath it right now. And that's the real, in my opinion, middle. It's also where we kind of 50-50'd above here. And so when you look back at where that is, I got the red line kind of with it. It's right on $27.58. Okay, so this made me kind of think about this idea of, okay, if that's the middle and we're kind of doing our yin yang around that, which we are, because again, when you look at where we were in August, going up to the top here, you can see that we're basically just circumnavigating that middle line. You guys are, I can't see that middle line. Well, again, it's where the red line is. I can move the red line through it if you want to see what I'm talking about. We're basically wrapping around it. I think this is just a new middle. I don't think it's a bad thing. I think it's just a new middle. So I don't think that it's bad that it's not this old middle. I just think, well, it's actually kind of good because you want to anchor it on something. So this becomes like an anchor point for the stock price movement. It then makes a lot more sense if you think about this flush to have a potential flush down low that then uses that middle as an area of support to try to achieve a new high. And again, it's not necessarily going to be perfect, but it's essentially like you're just transcribing that middle higher up, like from down here where it was in March of 2021 when it backed up, or let's say January 2021 when it backed up to this particular time period in January 2026. You're basically just kind of pushing it up on that angle. And when I was looking back at that particular measurement, look at this and tell me what you think. Because I didn't fudge this. What I did is I found that middle and then I dropped the center line downward. I created the downward arc. I doubled the value from here to the center to the end, and that gave me November. I doubled the value from here to the center to the end on the upward arc, and that gave me March. Those are a little bit apart. When you look at the distance from where that intersects, which is around $6.30, I don't think it's exactly that, but I think it's like close to $6.31 or something like that. So I think it's about $6.30. If you take the measurement from there and you look at where that goes up to the top in March 2026, it's a big move. But you'll notice that where the middle is right here. That's the center mark of that move. If there was going to be a move, that would be the center right there. Now, what's interesting about that number is that we just hit this number. We just did it when we backed up here. We went to like $46 or something like that. It's right there. And then if you look at that consolidation early on, check out the interactions of that 50% right there from that point. Now, again, it would be something if I kind of backed up into it, or if I kind of worked out of this rather, not backed up into it, I said it backwards. If I started here and said this is the middle, and then I tried to build it out. I didn't do that though. What I'm doing is looking at it in reverse, and I'm saying this is where it was. This is very literally, like if you look at that as a 50% marker, I mean, this is very literally like where it dropped off here in 2021. Like that's the dump level. And it's wrapping around that level and then dumping from it. That's the consolidation point. And then this just becomes like up thrust that tests it on the back test, which we saw in March, on that big push in March and AMC. And then these are the same. Look at where they go. This goes punches right to the top at 48, right? And backs up to it. So one of these hits the center mark on the wave. One of them tests the wave. One of them tests the level. And then what's even more interesting, you might not think it's that interesting, is there's a triangulation to that level again right now. And we had talked about going up to maybe 40 to 45, although I was like pretty honest. I was like, I don't think we're going to do it. I'm still not really confident that we'd probably do that. But again, that level could be indeed hit again right here going into May. Now that's kind of confusing because you're like, wait, I thought May is like the up period. Well, May, June could be. This is where I'm like kind of pittering out with it, and I don't want to go too much farther on that because I think it's going to triangulate pretty well if I can get it done. But I'm not quite there yet. So I don't want to go into like the date specific thing just yet, but I do want to share one other thing. So like when you take that measurement and you look at that on the big picture, again, this is 100% based on the red line down, the retracement that was made, the distance that was made, and then the blue line up. It's nothing else, okay? When you take that backwards and you look at that measurement, it's the exact same measurement. So what? If you did it mathematically correct, maybe it's supposed to be, Booksy. Maybe. But I'm telling you that it's because what we've basically done is we're transcribing like across a trend middle, a distance traveled that then we can travel again. It's like basically it's like generating like a perfect wave across. And it does make sense when you think about it in those terms, because if you're using and it should work, right? Because if you're using a trajectory out, right, and you said there was a wave that comes up and then over, and you said it makes a 50-50 cross. If you told me that, hey, it makes a 50-50 cross and then it continues again, what we would want to do is what we'd want to see, and I'm going to eyeball it first, is we'd want to see that this generates like a perfect 50-50 and then takes off to the upside, right? However, in order to kind of then go a step further, you'd take this and you say, all right, where that 50-50 is also where the top of this trend is. So here's the mathematics behind this, why this is perfect. I'm not saying that this negates anything. I'm just saying like this is probably why it looks perfect. Okay, so please understand that. Doesn't necessarily mean it's wrong. I'm just saying this is why it looks perfect. If you did this measurement correctly, then this particular distance here, from a mathematical standpoint, should equal the same distance here. So what's bizarre about this is that retracement level that you see on that particular wave is often that golden ratio. And or the 0.5. So the 1-to-1 leg up that we often don't think of as like the most important thing, the 1618 may very well come back to this idea that we're using sine wave mathematics in the market. But that's bizarre to me, right? Really bizarre, I think. Some of you guys are like, I don't know, maybe it's not that bizarre. It's bizarre. I mean, it's bizarre in that gives you a perfect schematic. And it doesn't have to be the same retracement every time, but if it's not, then it's usually shallower, like right, they went to 50%, this had to be shallower. This would still cross at like a lower angle, but you'd still have the same distance on either side because of the nature of the sine wave. So what we're trying to track here is we're trying to track two waves. One goes from the top to bottom in this sphere or this box, right? And that's the red one. And that's the bearish wave. And the other goes from bottom to top here, and that's the bullish wave. Some of you guys are like probably like not that interested in this, but the thing is that this is essentially like this is basically like the underpinning of the market. Like this is how waves are competing in the market. It's a fundamentally probably simple idea that I just kind of found that might have a greater correlation than I thought it did based on two other things. So here's the other things. The other things were the cat ears, right? So what's happening during that foretop? Why is there an appearance of some kind of a breakout that sometimes doesn't break out? Now, a Wyckofian person would just say it's going back up, but we have no way to time it. That's a problem in my book. I want to be able to time things in the market. So Wyckoff says it's going to go back up and test. If it's distributive, you'd look for signs, but you'd have to just wait for the creek jump, which is usually what I do, right? I'm just like, we got to wait for confirmation. You don't want to buy it until it jumps because it may not jump. But there's no way to really know, like timing-wise, when exactly that's supposed to happen. The options guy probably looks at certain things that are going on in the options trade, like the fact that there's these kind of synchronocrities between these different time periods might be very important to somebody who's trading options. And the fact that we were reading about, like on the S&P 500, right, that trade that has, okay, there's a put floor with all these long put strikes at 555. That's something that I think you would look at and say, man, that probably is a good way to analyze the market too, and it works, all right? The wave analyst may actually have a leg up, though, in that if you can measure the same thing out and find that it has consistency, then you do have an actual way of timing the market pretty early on without having to rely on data coming in from options trades or whatever. And this is what I think we're going to come to. I genuinely think that this is going to happen because there's a very significant momentum shift that happens on each of these waves. And so when you look at it from a helicopter standpoint, it's kind of hard to see it because you're like, I don't really get what you're talking about anyways. These are the quarters. So I marked them off. So these are the quarters. They're divided into 25% intervals. So the first 25% interval is right here. Now the reason there's two markers is because there's two different waves, again, that are kind of competing, right? Now, almost immediately, you're probably going to kind of pick up what I picked up on, which is that this is right after the breakdown, and this is right after the breakout. Yeah, that's important because, and it makes sense because if you look at the red wave, which is the red wave, they're coming. If you look at the red wave, you guys are like, what? That was a reference to like communism or something, right? They call it the red wave or something like that. It was going to spread over the world. We had to stop communism, Cold War stuff. Red Dawn, that movie. We're the Wolverines. We destroy communists. I don't know who invade our country. Anywho, this makes sense because if you look at where this is on this is the pinnacle of the low, and this is the pinnacle of the high. Get what I'm saying? Yeah, but how would you have known that in advance? Good question. The truth is that it would have been based on one simple thing, and that would have been right here. So this is it, right here. Now you're probably thinking like, well, dude, there's no way. That's not true. Before you say that, you may be thinking like, there's no way you could know what that is. That's not true because when this broke out, this is the breakout point. This is the candle that leaves the downtrend. It's the candle. It's a weekly candle. It wouldn't have been maybe that simple on like a smaller time frame, but this is the candle that breaches the downtrend. Then there's two candles, that's 2 weeks, and then it holds the downtrend and takes off. The moment that it enters, and I knew this anyways because there was another, I don't want to get into it too much, but we talked about these guys down here. We knew this anyways looking back because there's another channel here that breaks out right here. Okay. The moment this enters back in and decides the market says we're going to go up, immediately bulls take control and start building out a long-term trajectory line. We have used this line ritualistically without even really kind of giving it a whole lot of importance, aside from just saying, yeah, this sometimes happens. When the market starts taking off, I've often marked off the last known bottom. Like as soon as it jumps over, I'll mark off sometimes a trend. And I've said before that I don't really know why we do this, but we often go across this marker. Like this ends up being a really important support and or a 50-50 marker. The same is true on the small term. Again, if you've been here the last couple of years, you probably heard me say it a few times, but maybe not a ton, that you should always pay attention to some of those early breakout levels because there's usually like a breakout and there's some kind of a trend there that's being built out. And that's a triangulation. So we're saying, I'm not going to do it perfect justice right here, but basically we're saying we're going to go this way. You guys are like, uh-oh, there's one right there, isn't there? Yep, there is. Okay, and we're going to mess with it later. We're going to go this way. Notice it's pointing towards where I have it pointing towards. You guys are like, what? We're going to go this way, but first we're going to go up. We're going to kind of build out a triangle. Well, that's not fair. Then we only have like a minute of buying, and then we have months and months of selling. Okay. It may seem that way. I understand that. But we just talked about it a few minutes ago. I'm making arguments for myself because I figured that this is the thoughts you might have in your head. Like, that doesn't make any sense. So they're basically screwing over the market and they have long-term distributions. Yeah, but they do the same thing with accumulation. We've seen it. We were just talking about it earlier today. I said if this drops down and goes low, and like let's say it hits 270, you now have a significantly longer period right here, right, where you have time to now buy back in, to return back to the creek. And then if you're going to do a wave cross, it's even longer time because you have double that amount of time to jump that wave and hold on. It's already there. Like, we already know that there's a way to kind of time the market if it drops, because we can say, well, it's got to get to that creek, and we could double that time if we think it's a wave. How far away is it from the middle? That's time measurement. So it may seem like, hey man, there's no way that we could know, that was going to happen or whatever, or that, that how long that thing should take, and why in the world would it always be like that for distribution, pop and then take a year to come back down? It's not. It's true for both sides. There's just a difference in, like, oftentimes, I guess, in perception of like what we think about it. So we think it's unfair or something, or feels unfair because it's like, well, that sucks. So we're basically now, we had one moment to buy, and, well, sort of. I mean, there's been waves here, right? But this is ultimately like a wave down, right? That's coming back to this original trend that was barely even established, right? So as soon as this thing broke out, it establishes a new trend. I don't need to kind of do it because I've already done it. But if you had measured, bottom to top here, would you have been able to get it? I don't know. Maybe not perfectly. I think it would have been challenging. I do. I think there would have been things that would have been nearly impossible at first to kind of figure out. And this is where I'm at. Because, like, one example is like, well, yeah, I know now where the red is, but that's only because I have other information here, right? If I had started this off, I could have assumed that this was going to be the red, and it was going to go down this way all the way back to the bottom, right? So how did we generate this angle? How do we know where that's supposed to be? Because if you know where that is, then yeah, you have timing. You now have a perfect timing calculation for it. So how do you know where that's supposed to be? Well, this happens on AMC sometimes too, but a lot of times it's based on a previous downtrend. And if you had just used the distribution from the previous downtrend, and you had just suggested that, like, it's going to be kind of similar to the previous distribution, you would have been pretty darn close, like within a few weeks or so for the right date. As in, the timing that it takes to drop this stock ends up being roughly the same, right, from that distance. Now, if you had done it from here, you probably would have gotten slightly an off date, because this obviously is a little bit higher. It's not quite the same. Understandable, right? Understandable. It would have needed to be something that could be adjusted over time. Is there not a more precise way to do it, Booksy? There might be, but I don't know what it is yet. Are you going to figure it out? I don't know. I think it's something I need like a protractor for, and I don't use protractors very much, but I genuinely think there's something to do with, maybe it has to do with like the radial symmetry or something, like the radial motion here. I don't know. And volume is there. This isn't just in a vacuum. You have to be mindful that there's obviously volume. So in theory, though, if you had been able to identify this point, you would pretty much have the whole schematic. And then you've got both of the waves. It's all not set, but it's like, it's there as a big possibility. And what's even crazier is then when you look at these points of intersection, the low here, although yes, this is high, and the low here, and although yes, this is high, or the high here, although yes, this is low, they're actually synchronized in terms of like their momentum. Like the breakdown into this point in the middle, the breakout into this point in the middle, it's essentially the same thing. So losing the blue wave here, gaining the blue wave here. Do you see that? So like losing the blue wave, returning back to test it, but ultimately like this is the window in which that happens. And then gaining, you guys are like, wait, what is this again? This is the middle of the two. So it's set into quarters, a quarter system. It's pretty straightforward. Gann uses quarters, so the market does have a propensity to use quarter systems. You're like, well, Gann is not the market. No, but he was a mathematician kind of guy who observed that the market likes to work in quarter systems, and why not? It's how we do our dollar bills and stuff, you know what I mean? Like, we like the simplicity of dividing in half and then in half again. Simple. So that's what I did. Divide in half again. The reason why this became such a big deal in my head was because I found it here when we were talking about these waves, and it occurred to me that it could be that this is actually a cat ear describer, that this describes what I see as a phenomenon all the time in the market, that we just call it distribution, and we just know where it's going to be based on triangulations, and that it could be a split between the ears, that it's possible that where these two meet could end up being some kind of a split between cat ears. Like that's where we see the 1-2 and then the dip and then the 3-4, and the 3-4 has to be the one that jumps or else it doesn't run. If it doesn't jump, it doesn't run, it drops. So I was thinking like that's a pretty important detail because that could identify where that 3-4 is. And when I split this in half and then split it in half again, lo and behold, and this was my aha moment yesterday, lo and behold, this is indeed the split between two ears. So there's a very significant amount of information that I could take from that. Some of you guys are like, I don't get it. This would imply that you could essentially predict when it's going to go into this. I don't say it's always distribution because it's not, but when it would go into this phase of the second wave. Like the second wave being a middle here gives you enough information. It does. And then taking it back a step further, having known the measurement from the beginning, you basically could have measured it out. I mean, it's that straightforward. It sounds a little bit bonkers, but you would have been able to gain the knowledge of like where this breakout was going to be in advance. How? Again, like looking at the breakdown target, for example, these markers are not arbitrary. Like they're really, really precise. I hope that you guys can see that. Like they're super precise. Breakdown was this far away from the red marker. Breakout was this far away from the red marker. That to me is the best timing I've ever seen. Like I don't know how I would have done it again in advance, but if you look backwards at it, knowing what you know about this, that there had to have been possible. Because all you'd have to have is the middle. Like that's it. As long as you have this middle and you know where that middle is going to be, everything else here, I mean, like all you need is the middle. That's it. You need the bottom, the top, and the next middle. And then you get everything else. It falls right into place. So for example, let's say, for example, we didn't have any great information. I'm just going to draw this out really quick. Let's say all we had was a trend here. I know it's going to look pretty much 1-to-1. All right. But let's say we were like right here. We don't know what's going to happen. We know what's going to happen, but let's say we were right here. If I have the bottom, which I do have, let's say it broke out here and then it went up. All right. If I have the bottom, I'm just going to try to illustrate this in an advanced swing way instead of like a retroactive way. So you can see why this is pretty big deal. Like it's pretty important. If I know that this is where it broke out from the trend, right? And I'm like, okay, it broke out there and then it creates like a bunch of bottoms and has a trajectory. All right. What am I missing? Well, I'm missing a lot, right? Because like right here, I don't have information about which way is this going to go. And this is what I was trying to say. Like I need the middle. If I don't have the middle, I may not be able to get what I need to get. But if I have the middle, I have everything. It's just a simple matter of like, where is the center of this going to be? So I don't know. The question mark in the head, somebody hopefully out there, you guys are like, you're not going to tell us the answer, right? I don't have the answer yet. I don't. I have the middle right now because there's enough information here to have the middle. And by the way, the trend created, I got to get back to this in a minute, but the trend created by this center mark and these 2 points of interest, which are the middle 25%, that trend ends up building out this whole thing in terms of like highs and lows. It's pretty crazy when we get to that too. And it does confirm that that is indeed where the trend is. Again, that's hard to know though if you don't have the information. Where do I get the information from? It might be possible, because this did happen when I looked back at this, I thought to myself, well, technically, if you anchor these, and what I did is I took this particular level, and it looks like it's off, but it's supposed to be back here. It snapped to this April 2022 area where the quarter is, and then it snapped through the middle and then through the next quarter, which is right here. And by the way, there's the line right there and the interaction with it. Okay. It's theoretically, it's possible that, like, I guess if you somehow knew this was going to happen, like if you had an idea that, like, we're going to do a distribution now, there are like 1, 2, 3, 4 points right here in this distributive phase. They're just hard to see. There's actually like, it would have been like challenging is what I'm trying to say. Like you would have to know what to look for. There's right there and then right here. Obviously these are all wicks, but there's 1, 2 right there that actually hit like right on the line. So that line would have been generated on June 2021 and then again June 2021 and then hit again September, then hit again in November before the sell-off. That would have been the like only possible way I could think at this point that you could have maybe figured out where that was going to be, like that this established it. But normally when I do this, I look at the tops. So you guys know I've done this before and I look at those tops and I'm like, yeah, that's where the cat ear is, blah, 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 blah. I think the top is pointing. You can see it's really close. If you ignore the upthrust and you look at the other main solid motions here, it actually is pointing towards that center, but it's more of like a radial symmetry, like a radial, maybe the better word is like a fib fan kind of thing where you're like projecting outward, and that's the projection towards the middle. Like the directional movement is kind of the same. But let's say, for example, that you just, I don't know, we figured it out, we have the answer, okay? I'm telling you I don't have the answer, so hopefully you understand that. Like I'm thinking it's there, but I have to figure out how to identify it. But let's say you have the answer and you're like, all right, this is where it's going to be. That's the middle right there. You have everything you need, like at this point. If you think that the middle is right here because you're like, all right, identified where the middle is based on this trajectory that I got from, you know, these other methods that I don't know yet. You now have everything you need. You can build the entire schematic from that. Because then what I would do is I'd use the middle there. I would do a 50-50. I'd make sure that I have that as a retracement level. You know, make sure it all fits like a glove. Right? That would be that. Then I would have another one that goes from bottom through this middle. And you guys are like, yeah, but you're assuming this actually works, Booksy. Yes, I am. Right? I know. It's science. You can't assume things, but you have to, sometimes you do. Like, that's called the hypothesis. You have to say, like, all right, I think this is going to work. You would have this. So you'd have the upper wave. The middle gives you everything. It anchors the whole thing. And you might think like, oh, I don't have enough still, but you do, because you also have the center here. You have the center here. You see how quickly this like builds itself? It's built itself out like pretty fast. And then these guys, these dots should be on center here. These dots should be on center here. And then they will pass through the middle. So you have to just make sure that it's roughly equal. What's interesting about the wave is that it actually has a pretty strong connection to the upper wave in the beginning, this right here. The building out ends up rounding off in a very interesting way. This first bit of information gives you a huge amount of data, but it is there, okay? So maybe we would have this be a little bit higher, I don't know, as a result of that, and then this could be a little lower as a result of that. I'm not sure. Just based on the example that we're doing. But you would have that, and then you would project downward like the negative one, which is like your bearish wave. It's really just the only thing you need is direction. It really is. And then you're like, yeah, but now what? Well, again, you have the middles. You got the middle here, and then you've got the middle here of the quarter system, so to speak. So this guy would be there. This guy would be there. And then you'd have some kind of a equilibrium. This is the S curve down on the retracement. Okay. In theory, you're done, right? I mean, in theory is that you basically have got the whole schematic essentially in the palm of your hands right now. As you roam the earth, you have the map and you're like, all right, there it is. Now, is that perfect? Did I just draw that perfectly? No, I was trying to rush through it, but you get the idea. Missing like corners somewhat. But the rest of it, you might say, well, again, I don't really know what that means, you know? Well, again, it's like the same idea. You would basically bracket where the low is here and the high is here because there's going to be a controversy. Someone's going to be bulls are going to be trying to do this, which is probably why we always see a wedge, because you're pressing down against that. And this happens all the time, right? And this is why the wedge is such a hit or miss for us, because it looks like it could be bullish and then it's not. I bet it's because of this, because usually this rides the wave. So usually there's a wedge, and then this is the breakdown point, right? And it gets to this place where it's like, oh, that's the first quarter system. So typically you would say before that first quarter, it's going to distribute, or around that first quarter, it's going to distribute. And then it would be at a subsequent low at some point down here in the future, and it probably back tests and so on and so forth. Now, yes, I'm basically copying the GME chart. I understand that. But that would be like one way to understand that middle. This middle would be a little different, because this middle would essentially be the opposite, right? Where you have, I gotta make sure I get this right. Just make sure it's separated correctly. Like a potential breakout zone. And this is the tricky part, I suppose, if there is a tricky part, is that now you could take a measurement from where it broke down to the place at which this is at the low, right? And that's going to give you a reverse measurement from the place that this is at now the high, even though it may not be at its highest point, to the low, and this is now the breakout zone. How do you prove that this works, Booksy? You just do it. Why are you so sure this is going to be worth your time? I don't know, man. It's like a hunch. Something about it rings really true to me. Like it's one of those pieced gap filler things where it's like there's little bits of information that you have, and then you see how this kind of links it all together. And then in addition to that, you've got other levels. So I was talking about the curiosity of a lot of this is that when you identify those 2 points, you may not have it like perfect at that time. Like we don't know exactly where it's going to be in this time. We just know this is the pivot low. So you have a generalized idea. And then we don't know exactly where it's going to break down, but we know this is the pivot high. We have a generalized idea. Same thing with this. We know that this is like the pivot low, pivot high. So there's going to be some interaction here. The reason this looks like this is because, again, this is where that cat ear comes into play. It just does. And there's an opportunity, if it breaks out, to not go all the way back down to here. I think that's the potential in like a sell down. There's an opportunity here to essentially like go the other way and start working your way back out in a completely different model, but that still obeys like the same ideas, like an LPS. The LPS spring, no different. Both of them employ the same cat ear. One just happens to then break to the upside on the second M cross, 1, 2. The other breaks down, 1, 2. I didn't draw the 1, 2, but it would break down here. Okay, it goes into the spring. This is very consistent with what we see in wave analytics. Before you start saying like this is never going to work, this is extremely consistent with what we've seen in wave analytics, where this ends up breaking down low and coming back to the bottom, because the one that cuts across it does end up being like the creek. And we've seen this time and time again with our wave analytics for a number of reasons. You might be saying, yeah, but this works only on downtrends or something, or this works only on uptrends. No. Because the principle being applied here is the same principle that we were talking about. I got to use the sine wave thing. It's the exact same principle we were talking about with the sine wave. That's what's amazing about this. It's not inconsistent with anything, as far as I can tell. Right? So far. It's just not, which is great. Where is it? I always never can find this thing. Here it is. All right, ignore the noise over there, right? But you remember this is a very basic sine wave principle that when you cut through the middle, it points to the opposite top. This is a straight across sine wave, so there's no like tilt to it. Notice that this is tilted, but it's the same concept. The difference between the two is simply that this is at an angle, like this one over here. I can't see it at all, but it's at an angle. That's the only difference. That's it. So what we're really doing is we're taking this, which is your upper wave, and we're dividing it now into parts, which I guess I could have done before. I just never did it, right? We're dividing it into parts with the lower wave. And this is all I'm doing, is essentially saying that this actually does exist. And not only that, but I think it triangulates correctly. I do. I think it timing-wise correctly gives you, because this is kind of loosey-goosey, right? We don't really know exactly where anything's going to be. I think this correctly gives you what's going to be later your spring and the actual pivot at the bottom. So prove it, Booksy. Do the work. I don't know. I don't know if this is going to be something that ultimately can be perfectly provable. I think that what this turns into is an exercise of like practice and needing to kind of refine it. And I know that in my brain, I'm like, this is correct, but we don't live in a world made up of perfect sine waves. So in order for you to get this right, the biggest problem maybe, and the biggest question is, where is the middle? And the reason why that's difficult is because the only way I know to triangulate middles, the only way I know is by using, aside from like what I just said, like maybe there's some information here about the angle. The problem is not that this is like, oh, this is great. It's going to work and yada, yada, yada. It's so easy. Why can't you just use a wave like that? Because a wave is built on the principle of trajectory. And so if I were using this and I said, I need to find the middle, and all I had was this information, I don't know where the middle is, then the only way that I can do that, I might have this trend. That's a given. You probably have that. It should be there somewhere. You just got to pick out the right one. You got the right trend. But how do I know how fast this thing's going to decline? The only way I know how to do it is to measure like a wave. And frankly, like I don't want to say it's unreliable, but that's about it. Like that's pretty much all you can do. So if you think there's something else that we can do, then let me know, because this would be the only way I could think to kind of identify wavelength wise, because it should be the same. And again, that's just trajectory in, trajectory out. Trajectory in, trajectory out, right? That one actually was like even steeper. So that's confusing, right? It's really more about the middle measurement in this particular case, but I don't know. How else do you triangulate things? People use Fibonacci because they go here and they say, well, I think it's going to intersect the 0.5. Well, obviously that's what we've got on the chart because I just drew the box at the 0.5. But you could also say, like, I think this is a wave too. I think it's going to intersect lower. I think it's going to come all the way down to here. That's more like what we saw with a trajectory in, trajectory out. Like it's going to have a deeper retracement. So this is like the only thing I can think right now is like this would definitely, each time would definitely change the nature of how you measure it. Because if you think that it's going to intersect at different points of interest based on time and whatnot, then each of these would give you a pretty drastically different from wherever the peak is. We could say it's like over here. Each of these would give you a very, I think, drastically different approach. So like that's not really enough. This kind of just gives me like, I feel like this is what the quantum computers are doing or something. Like they know that there's an infinite possibility and they just calculate the best one. And we're trying to figure out what the heck one is being picked. But I feel like a computer could do this pretty easily if it knew what it wanted to do. Don't you think? I think a computer could do it. What about fibs? You know, what about fibs like a fib fan? Because that should be the same thing, right? Like if you have a bottom and a top, you should be able to have a fib fan. The top should have been at the 0 value. I messed up in this particular case. The top should have been at the 0 value here. Would a fib fan accomplish roughly the same goal and give you like estimations? Maybe. If it's done correctly, I think you could probably figure it out to some degree with a fib fan. There's a GAN fan as well. The pitch fan would not be would be useful again if you kind of knew where you were wanting to go. And this is one I wonder is like if you were using like a pitch fan and you didn't know which one it was going to go to, you could probably do this until you've refined your region. And this would give you a sense of like direction. Like we're probably going to head along these paths down until you get to a point where like, all right, this is not really the middle, this is the middle, or this is not really the middle, this is the middle. These are very easy to shift around and it'd still be mostly correct. This is the way fibs are. You can kind of tilt them around. It wouldn't be like, you can't do it, you know, irregardless of levels. You still have to pick levels, but this is the one that, you know, a lot of people will use. What we could do is like take this and try to triangulate based on the upward trajectory, also levels that might intersect. I don't particularly love using the downward trajectory without the pitch fan because this one, again, you'd have to kind of pick which one you think is going to be right. But we could pick something like that. So what did GME use? That's a good question. That's the question I would ask. I'm not sure yet. I haven't even tried it. But it must have used something, right? So I don't know exactly how we came up with this middle. Like I said, it's kind of the same as the drop back here, kind of. I don't think it's exactly right, and I wouldn't have been able to do that perfectly in advance, so that doesn't really give me the answer. I don't want something that's kind of half-cocked, so to speak. Looking backwards at where that center mark is here, where it took off, that could have been one you could have used. It looks like the breakdown level from the top through where it broke down right there. Right there. So like the last up thrust. That's a possibility of one. The middle, that one actually looks almost better over here, and it definitely looks like it breaks out there better here. This might be a better one. This looks stronger. It might be a little hard to see that, so I'll hide everything real quick. So I don't think you guys will be able to see it very well. There you go. But this wouldn't have given you the middle. The middle would have been here. So you would have been thinking this is the middle. Although this is definitely a strong one. I like it. It seems applicable. Yeah, I don't know. Going to the very first up thrust, that's actually pretty darn close. So the first motion was at the top. The second motion is the second peak. That's not too bad. That's not too bad. But again, it would have been like, how would you know where the middle is? You're just going to pick the top line? Because it still feels a little bit ambiguous. Like you wouldn't necessarily know if it's going to go down this way or not. I don't know. We know this one's the right one. The blue one. We know it because that's the one it is. Right? But I think at the time it would have been challenging maybe to figure it out. So big question mark there. Very important piece of that puzzle. And I think using trajectory inputs probably is the right answer, but we're just not there yet. Like we don't know. It's almost like a physics problem, right? When you think about trajectory and stuff, we just don't know where that really comes from. Like we don't know what exactly that's going to be yet. I will do my best to find out, but I'm not sure yet. And if I could find that middle and identify it, then I think we'd be in a good shape. Because like I said, you can build the diagram from it. It's pretty easy. Okay, so it's really significant in my opinion. Now let's talk about it like a little bit more, because there is a little bit more here. So I was mentioning this April to August bit. So these are the two peaks. I'm going to get rid of these yellow boxes for a second. Makes it a little easier for you to see, but it's cluttering my screen. I don't like it. So I'm going to get rid of these as well. We already demonstrated that that was true, that it actually gave you breakdown, breakout from that distance across the downward wave. When does it cross up and over? But this is interesting. So when I went back and I looked at where these were, so I looked at this April 2022 top right here. I was like, okay, that's where I think the quarter is. And then this is where I think the quarter is for the red wave on the right side. And it's, again, right here on August. When I took a line and cut through those dates, approximating where that is, and I went through the middle, and that's really important, the line that was generated is this middle yellow line here. And I know that in the back of my head, I'm thinking to myself, there might have been a way to get this without what I just did. But really the reason that this is where it is because this is essentially like an averaging of like where it is. This could be any number of points. You could pick a point farther back and then a point farther forward, and what you would find is that if you try to go through the middle, it's going to be like a radial symmetry, right? So no matter what we do, we could pick out one here and go through the middle, right? And we probably would find that there is some kind of a radial symmetry going on, like pretty much forever and ever, right? So there's another one right there, and that's the support over here, and then there's a support. Oh no, it means something important. Maybe, I don't know. But the reason I picked these, I mean, it could, I don't know. Radial symmetry is cool. It might matter. They might be using these to calculate certain things in some ways. It makes sense as a curve, because a curve would be using a bunch of tangents that would move like radially around, but they wouldn't pivot on the same point. So I don't know. The other thing that I wanted to point out was like that I'm not doing that specifically, but I was really just picking on that quarter system. So I was using like the middle 25% and then the end, which is like 75%. And when I took that marker and I drew it forward, it kind of made me sick to my stomach, to be honest, because I was like, oh, that is the trend down. But what's fascinating is that if you take it to the end and you put it backwards, that's like the lower trend. So you guys are like, well, you just said the same thing twice. I know. My brain did a little bit of a short circuit there. What I meant to say was that I took that trend and I plopped it on the end goal going backwards, and this is essentially like the trend that was built over time. It's the bottom of the triangle as opposed to the top. The top of the triangle was the wave center. The bottom is just a parallel to what we see at these 25% intervals. Okay, so then what? Then the next most important one, if you have a bottom, would be the top. Correct? I've lost a lot of people on this stream, man. Oh well. Those of you that are here are going to be hopefully big-brained. I don't know. You guys you'll figure it out before I do, I hope. So this is just a box. It's just an intersection. If you look carefully and you see the red, it's just an intersection across a wave. Again, this is something that I would expect, because when you have a channel, it does the same thing. And we've talked about channels before. So if you build the channel, you always have that same concept at play as well. So a channel marker, and I'm going to make it, this isn't inconsistent. It's not something completely brand new. It's just a simple way of understanding wave analytics. Because just like we talked about on that straightforward one, if you have a channel and you have a top, a bottom, a bottom, a top, and a bottom, you might think that you don't have enough information, but you actually have plenty of information here, because if you go and you look at the triangulation here, as long as it holds the trend, this tends to be very true, because on average, it tends to intersect here. And I did this, showing you guys this with like weird stuff at one point. Remember I did it with like diminishing perspectives, because an artists actually use this as well for diminishing perspectives. It's very interesting. And I don't even think they know what they're doing, but we don't. As an artist, I'm like, man, I don't know what we're doing. Somebody just taught me how to do it, and I'm like, it works. But it actually works really well, of course, with the sine waves. Once you generate these motions, it is an averaging system. Like, you can be wrong about it. You can get the wrong bottom here. It's not impossible. Like, it certainly is possible you get the wrong bottom. You know, sometimes things double bottom or triple bottom, or they have a weird shape on the bottom and you're not really sure where the middle is. But on average, this tends to be very true, because as you were to chart this, this would be how you would chart equal part waves. Now, timing-wise, they may not work out perfectly as equal part waves, but this is the way you would do it, okay? And this is the way I've done it before on stocks when they're moving more regularly, which doesn't happen that often. But you totally can do it. And you can do it in a downtrend, you can do it in an uptrend, and it works. The reason why this is so brilliant and why I love it is because what it's doing is it's basically just replicating angles, if you think about it. It's just replicating like ascension, descension angles, because if you change the angle of one or the other, the geometry of it, and I think I told you guys once, geometry was the only math subject in my entire life. And I'm not just saying that to be a smarty pants, but it was the only subject in my entire life that I made a B on. And now I'm like, it's super useful. Those are rotated triangles, right? They're equal to each other. But it's essentially just replicating that angle, because this is a two parallel lines. So it intersects that angle. It's going to create a 180 difference, right? And then it's going to crop it the correct way. That's how it works. This is always 180 degrees, so this angle is going to be mirrored on this side. It's really interesting when they're parallel. So what this does is it gives you a way of understanding like the wave in a non-regular, non-sideways environment. So when I look at this, I'm like, so what did I really just kind of quote unquote discovered is that 25% is like an average, directional average for this entire range. And by applying it to the top and the bottom, I've essentially just created the same schematic. I'm going to make this yellow for just a second, but I essentially just created like the same schematic that I just showed you, right? Generating like bottom, top, bottom kind of thing. Pretty interesting. Is it? It is. It is, because at the end of the day, if this were to come back down into this pocket and land on top of that creek, it should be symmetrical. Again, it should be like two triangles rotated on an overall downtrend. Here's the kicker, all right? If you're kind of like, all right, whatever, dude, it's just a trend. I understand that. It doesn't seem like a big deal at first. I'm like kind of the same way. I think about things and I'm like, well, that's cool, but I think you could have figured that out some other way, right? Of course you could have. But one thing that really kind of got to me was like, as an averaging system, it's hard sometimes to find the right, I think it's hard sometimes to find the right channel. I think sometimes channels are kind of mysterious. Like there's poking out all over the place. You can't really figure out exactly where it is. A lot of people just have different methods of doing it and trying to be really consistent about it. They like to use the pitchforks and things like that to kind of just build it in, keep it simple. I like that too. And I think you have to, because the market's not always perfect with its numbers in terms of how it moves in that channel. But what I did is I took that same principle and I applied it to these two recent tops. I was like, that's curious. Let's look at these two recent tops then, because they extended beyond the top, right, of that supposed channel that we're not really sure about. At first, I would say like there's not really much to say about it. There's just two that are kind of basically wicking above it. There's not really a lot of interaction. At first, it doesn't look like they're of much consequence. But then later, when you start looking at the triangulation for where these are, this is actually coming back to the same pocket. And if you think about distribution on an angle, you might expect, again, and it's not like perfectly across. So we talk about distribution as a level, we're like, oh, we're going to come across from 47 straight across to here, right? If you talk about distribution at a level, you'd say, oh, we're going to come across 34 straight across to here. What's bizarre is that those actually triangulate the same, which is, I think, is very weird. I think that's really, really odd. Now, it doesn't have to be like super deep and crazy all the time when we talk about stuff. Sometimes it just is, I think, simple math, right? And I also think that sometimes this is probably just the most common sense way to look at it. Is like, if we're distributing and we're going down at a kind of angle, it may very well be that the distribution is not actually horizontal, right? It could be that the distribution is actually a lot more of a diagonal, and that could be all there is to it. What really got me though on this was like, okay, so what? These are triangulating basically to the same spots, right, that we are looking for, which is strange. Like they're basically the same two goals, which is weird. What really got me on this one, though, was the cat ear, because I noticed that when this came up above, it heavily interacted with that top trend, and it heavily interacted like rejecting it too, which I was like, oh, that's strange, because I knew there were parallels here. Remember I found those like parallel structures? I was like, I knew they were there, but they were slightly more tilted. What's crazy is that the parallels that I found and this parallel both intersect right here. Now, I don't have the other parallels on the screen right now, but it was basically from this top to here, and then there was the extended hours top at the same angle, essentially, okay? And they both intersect this same region, which is kind of crazy. So I'm looking at this like, well, that's odd, because if I looked at it from that point of view and I didn't have the other information that I had here, if I had nothing here and you thought it'd go up, you would be concerned. If someone told you that's the top of the trend, you would definitely be concerned that it doesn't make the jump here. So what? So I did this separately, and this is now overlaid on top of it. And this is the line I got from doing the quarter system, and it's going from the very peak down through here, and now look at where it is in relationship to where the smaller, more detailed one that I did locally was. So this is the one that I did quite separately. I actually did this first, and I worked on this one a bit to talk about how it could be an angled down drop kind of thing, and so on and so forth. And we looked at a few different possibilities there. This is a very interesting thing to me, because I'm like, I had said that it's possible this goes up first, then down. And the reason for that was based on some odd things. I don't know if I'm going to have to fix it, but that's actually backwards from what the big picture says. Big picture actually says down first, then up, which makes sense, because you would have an up thrust before you go down, and you'd have a spring before you go back up. So short term actually looked bearish. Long term actually looked bullish, but it didn't. What's crazy is that this, again, like, it's hard to make this stuff up. It really is. This is not, I can't understate this one correctly enough, but this was the design that I had based on the theory that this might be the middle. This is where it all started yesterday. And then coming backwards, I'm like, oh, so jumping that actually does mean that you're jumping over and going up to distribute, like as if this is a diagonal, and you are jumping over that outer trend line there, and that's right where it's the exact same spot it's supposed to be, which was on April 2nd, which is crazy. And I'm like, what? What? That doesn't make sense. And not only that, but look at where the blue is here. Now we're going to start getting into some more, like you guys are like, that wasn't practical. We're at the blue marker. Now it doesn't mean it's going to hold, but notice that if this presses up into a corner here going into May, notice where that is in the grand scheme of things in terms of like cat ears. Notice where it is in the grand scheme of things in terms of this macro wave. And then notice the difference. And this is where I'm starting to get more like, oh, you know, about my own stuff. Is like the difference in the direction here is huge. There's no longer like a tiny difference. It's like if this pops and then drops back down, the difference between the blue and the red at this point is magnificently huge. And one of the things that really kind of crushes souls in the market is when the cat ears finally do break down, there's this sense in which like you're going like way too far. You know, like it always feels like you're going way too far. At least to me, I'm like, why are we going so far down? And I'm like, gosh, because I know it's going to break, but it's like that. I always say, well, if the curve is, if the cross is really low, then you got to be careful because it could go really far. But another part of this might be that these waves are diverging at some of these markers, especially on the second half, not the first, because the first half would be like the beginning of the waves, which also might explain why the first half of these waveforms doesn't quite always look the same as the second half. The second half almost always has like the perfect cat ear kind of setups. Like I can see them really easily. The first half, if you look at it on the whole, feels more like I've said it like before, like a mountain or something. Like a lot of times it's not quite clear what's going on. It might even look like a head and shoulders sometimes. It's not really clear what's going on. Like there might be a cat ear in there, but it's often like obscured. But the second half is usually a lot more clear. And I think there might be a reason for that. And it might be that this build out, again, supports that. So if I had to make a guess, yesterday I was talking about how like, well, it really depends on whether this comes high or comes low. And I don't know for sure. But the more I started thinking, the more I was like, well, these are layered up. So there's a sense in which it doesn't really make a huge difference. This is ear one. It's got 1-2 parts in it itself. There's another ear two that's missing, in theory. And really, ear one would have started maybe even back here. If you think about the quarter system, this is a 1-2. This is the cross up, and then 3, and then 4. So the danger here is that we're assuming that 3-4 is bullish, but 3-4 might not be bullish. So if this is the middle of two ears, I kind of misspoke just then, because it looks like this is all one, but remember, this is the actual breakout. So this is actually the first one right here. You guys are like, what? It is. And then the second, because it's the jump. And the second, again, you can kind of push them back and forth. It's okay. The second would be here as a 3-4. If 3-4 breaks down, it would look like this. And this is exactly what it always looks like in the market when we break down. It would be like this dump that would then like prop itself back up, potentially going pretty high even. It just depends on where that intersection is on that creek. Notice, before you guys say, well, that's kind of crazy, it sort of works with the waves and with this thing. Notice this. Notice that the actual trend here, notice where that is. And then take a look at this as a sign of weakness that pops up, dumps, and then comes back to the ice. Uh-oh, you might say. So, Booksy, is this going to like go to the moon or is it going to crap out? Does it get over the ice or does it not? That's the real question. Because if it doesn't get over the ice here, it will crap out. And in fact, I'd go so far and I would be willing to say that I would be very, very confident that this is actually going to go all the way back down to 6 by October. If it does go over the ice, this is actually a bullish scenario that plays out with a spring, because when you see this drop, you might say, well, that's a sign of weakness, Booksy. Sure, but it still has a support down here at 18. Correct. And this is the interesting thing about Wyckoff coming back into play, is because if this builds out into a spring, then the expectation would be that you would take off here going into June, which makes sense. There's June 3rd. This is basically the same time that Roaring Kitty said he thought we'd be going. You'd be taking off into June, and you would break out here, which is above the ice, right? You would take off above this level. Okay, you have to, because that's the ultimately like the main trajectory there. But what that does is if you at that point, notice where that intersection is over here in like July. At that point, if you can make that move, it's nothing in the market's perfectly guaranteed, but like you're making that move, you're above there, you're probably going to take off. And there's another marker that I found. This is where it would take off, right? So it would go above and then it would rocket through here. And what would happen is it would resume, and this is important, it would resume, and this is the slingshot, guys. It would resume right here. Remember this wave? If we don't get that wave, we're going to be like, uh-oh, I guess we're never going to get it. But it actually would resume right at that wave. Like that's where it should start picking back up again. And it's probably where you'd see an SOS and kind of like a midway point on this move before continuing on. That was kind of slow, isn't it? Maybe. Remember, GME did something a little different than AMC. It went straight up, and then it went sideways and up again. It didn't have like a two-part move. The second move was like a later move that didn't go quite as far. So there's a difference. It is possible that GME just kind of takes off and goes all the way up, right? And it's already there by the end of the year. And then you end up with a second move at the end in March or something like that. Sure. You know, I don't know for sure what happens. That's kind of a silly thing to speculate on right now. But like, that's what I would say is like, well, it could be that way because that's what happened back here. Maybe there'll be something similar, right? You'll get a big pump up and it'll fly and then do it again. But the point being is that this is now going to be that intersection zone, and notice that it's above. It's an intersection of the wave and that topmost now creek push. This is essentially like the breakout level. You see how this starts like fitting together really neatly if it has that breakout in June? I mean, it really does. It may not be as fast as this. It may be a little bit slower. It may be faster, but it does fit very neatly where it should. This is where you would expect to break out. And notice where those levels are. Again, I don't want to overemphasize anything, but notice where those levels are on that intersection right there. Everything's kind of where it should be. It's pretty nice. Now, what if it breaks down? Does that mean it's over? Potentially, because I mean, if it broke down low, there's really at this point no guarantee that you're going to come back up and ever get back above, again, like the ice level, which could be back up here at 27. Is it still a big move? Well, yeah. And this is the interesting part perhaps about this whole schematic is that there may very well be, no matter what happens, and at this point I'm not willing to say like one or the other is definitely going to happen because I'm not willing to say that right now, but it may very well be that no matter what happens, there is a similar motion at that time. So one thing that I'm thinking about on the grand scheme of things is like, well, this could be like a pivot no matter what. And if it is, and you drop down to 6, the pivot may not lead you all the way back to the top. I mean, it could. Like we said, that actually is the same distance as the original distance traveled. It's not impossible. It's the same move as the first move. So certainly it's a possibility. But let's say, for example, that it didn't end up making that big of a move, like it hits the bottom and breaks out. Some of you are going to be quick to point out that on the grand scheme of things, that actually doesn't look that bad. Because if this ends up being like a double bottom, and it could be, this could be like a terminal shakeout. And if you're thinking about that, you're not wrong. Because technically, yeah, this could be like a spring bottom. The floor could be at $10, and you could spring down really quickly and then leave. A lot of people think, oh, it's not going to happen, so on and so forth. But there it is, okay? I already get that. That motion right there, though, still works. And it would make sense then that you would have to break back above 24, which just so happens to intersect again, at this particular time and place. So all of these little like doodads that I've drawn that are kind of maybe a little obscure by themselves, when they start coming together, they really work perfectly. They actually define the motions that I was usually kind of just saying, well, this is where it happens and this is where it's going to be. They really define those motions quite perfectly. Like they basically bracket it in. And going back a step further, you might have like doubts about this, but notice that the angles, and this is kind of where I'm like, oh, we were talking about this earlier. Another thing I'm like, oh, the angles at which we're ascending are essentially like going up towards like these pinnacle moments. Like they're going up towards these intersections at the tops. You see that? Like we're compressing into this corner up here before we make a decision. We're still riding the top of that wave, trying to decide if we're going to make a decision. Then we go underneath it, right? And we assume the lower directional wave. That's like the more directional movement. The same thing's happening here. We have this lower directional movement right now that's pointing down, like really far down south. And if you look at the last two major motions right here, one is right here going across December, the other is at the top here going down. They're actually they're both pointing towards this floor. Like they're both pointing right back down towards the bottom, as if, oh, we're going to go back down here. Bears are like, oh, we're going to go this way, right? We're going this way, right? We're going this way, right? Bulls are like, we're going this way, right? We're going this way, right? We're going this way, right? Do you see it? This is just a giant competition all the time, which everybody already knows that. I'm not saying anything new there. But to have that data and information suddenly gives it a very, very informative and important. I think it's an important thing. The timing of it is really where I'm getting at. It's like I think it's super significant. And I haven't quite finished yet. I know we're done today, but I haven't quite finished this whole thing yet because I know there's a problem here of like, well, so what? You got one piece of the timing, but you didn't get the second piece yet, right? Well, sort of. So I've divided it into quarters, and I know that that's important for the 2 years. The other thing that would matter in this grand scheme of things, I suppose, would be the distance between year one, year two, and then what we would see as, and it's kind of tough because you have to pick one. And I don't know if you should pick red or pick green. I might do both in the middle or something. But you would use like these two, and you would say this was the year one, year two motion right there. And you would take that same concept and you say, okay, this is, and of course it's in the right spot. This is ear. Of course it's in the right spot. This is ear. Why did I even question myself? Of course it's going to be right. Smug booksy. Look at it where it is though. That's where the supposed low would be. High, low, high, low. High, low, high, low. I wonder if I use a different color. I feel like red is too tight. I think I'm going to use green because green's where it broke out here. It's right at the bottom. So I'm going to go bottom, top, bottom. Actually, that looks better because that goes back to this intersecting the floor the first time right there. I actually think that looks better. And then that is actually the low pivot right here. That's where it pivoted. So let's try this one instead. It's pretty darn close either way, but I feel like I'm going to have to do both. I don't know how else to do it because they're not the same wave, like length. The red and the green are slightly different, so. Now that's interesting because That's really interesting because that actually implies that there's still downside until April. Then there's upside and then downside. The downside could be a lot of different things. Like this had downside that was actually 1, 2, and then a 3, 4. This could be very similar where it's like a 1, 2, and then a 3, 4. And still down. But it is very, very close to where I was estimating. I mean, that's pretty dang close. So here's what's weird about what I just did is I used the green and I measured back to here. It's one way to do it. There's probably other ways. You could probably measure to the breakout as opposed to the bottom. That's one way to do it. You could measure breakdown, I guess, breakout, either one back here. And then you could use that in the middle as well. But I did measure to the green. And what's weird is that distance traveled is actually here to here to here. That's the equal distance, 1, 2, 3. That actually goes to the end of the red schematic. So it would be, yeah, that's weird. So in terms of like a sine wave, it'd be like that. Albeit maybe not perfect in terms of lows and highs. I'm trying to get this right, but it doesn't want to fit. This is off. I'm looking at like this side and then this side's off. I'm like, that's not right. It might be one of those things because it's like maybe it's not working on the time frame perfectly, but yeah, it may be, you may be thinking that like, well, it must then have to keep going down past earnings. It might, but I don't think it's that straightforward. I think you can have like a bounce out here and then come back down and hit like a low. It doesn't really make a difference. If it doesn't have to be like the low, this actually goes lower first and then comes up. And you can see the high is way off. If you were to think that, you'd be like, oh, the high is not in the right spot. No, it's not. But it's really about the level that it's compressing at and breaking down. So this doesn't necessarily mean that it can't widen on the way down. Like, that's not really a thing. Just like back here, the wave itself, technically, it's like already coming down and then it drops. It's already low and it's coming back up and then it rides the wave up. It's just a different way to navigate the same. It's more about the timing of it as opposed to just the perfectly having direction. But man, that's really close to what we see here. Really close. And that does imply a May through June move, because this should be like a bullish area. Roughly. The timing on that's pretty tight. And then that's just weird to me that it goes to the end in October. You're like, yeah, but again, I don't think it's that black and white, because if you went up here and broke out, you may very well get to the peak early. You might get there in August. It's kind of the opposite, right? But then you still have like a downward cycle that could drive the price low. You know, we don't know 100% all the time what things are going to look like. So this is not really a concrete thing, but it does work. I mean, it makes sense to me. And then this would be like having like a lesser up first, which is the hook, and then a bigger up later, which is the run. So it's opposed to a run and a pullback and then a weak second run, which is more like what happened back here, I suppose, to some degree. You'd have a, which is really the resulting action. So I don't know. The safety zone is definitely after March 2026 in terms of upside, assuming that it does break out. Because either way, you would expect that to be the highest point, or a high point. The wave itself, again, just kind of looking at this is kind of a mixed bag, but this is what convinces me about this too, is like that initial buy-in has that angled approach. It's right where it's supposed to be, and it does make it really convincing to me that that was going to go back and hit. If that's the middle, we're in trouble. You're like, what? No, we're not in trouble. It's just that you would look at this from a different perspective in that particular case. I think the middle would be up here when it broke out. There should be a middle like right here somewhere. It may be the same angle, but it would be up there, not down here, like right there. Because then that would be like the 50-50 through the top, and that middle would lead you right to the bottom, and it does right there. Yeah, I don't know. There's not really another way to do this. I guess I'm pretty sure that I'm right about these 2 points, but I think that what happened is in my confusion is like, I'm not really sure if I should use this as the breakout as the middle, or should use this September 18th area as the middle. Because that looks like that does look like a 1, 2, 3, 4 turn to me. And it certainly is a smaller and smaller M shape, like it's compressing. So when we do it that way, it's kind of a completely different result. I mean, this one measures out, see the difference? Like this goes out to here. It's really weird. I don't know which one's right. So this is like low, high, low, high, low. That's a lot tighter. A lot tighter. Could be both. It really doesn't make a huge difference because they're pretty much landing near the same spot. I guess it doesn't matter then. Hazel, no, it's not subjective if this is true. This goes to 340. It would at least go to the blue marker here at 206. But I think if you triangulate the second part, it's 340. Which may not seem like a lot, but, you know, in the grand scheme of things, it's probably pretty realistic just based on what we're seeing on these trends. I mean, it does match that main trend. I don't think that's a coincidence, or I hope it's not a coincidence. It looks like it matches that trend. It's just a wave, guys. It's not complicated. The biggest difference here is just how you get there. Whether you go low and then have a massive dive before a big rally versus an LPS, which doesn't kind of come back down to that first creek. It goes just kind of to the middle maybe and then goes up. And the middle, again, it may look like I'm being kind of nice about it, saying it's here. There could be a slight combination of these things, you know. I don't want to make it like it has to be one or the other, because the middle might be coming back down to like 13 or something. It may still have a slump here and then take off. We don't know if there's going to be a terminal shakeout for sure. I'm just saying, like, this on average works pretty darn well. And the levels that you would confirm these moves are in the right places. So 340, yeah. 320, whatever. 330. I don't know. Something like that. The intersection that I have is at 323, I guess. I made it a little too high right there. But at the very least, I think 200 for GME. This is not going to be the same for AMC. Can I do this for AMC? Yes. In fact, I think I've already kind of done it without knowing that I was doing it. Because on AMC, I had two competing trends. One was an S-curve down from the top that goes to like $1. The other was a push up from the bottom that goes up to like 80 or 90, which is realistic, 70 to 90 maybe at most. Those are the two waves. They're just different. I'm going to be heading out in a minute. We'll see how this market goes, man. If we don't get a market turn by end of March, I don't know. I'm going to be in kind of a crappy spot because I want to see some movement. And if we don't see some movement, I'm sitting out on some of it, but I'm not sitting out on others. And I'm not going to be in a good position if we don't have any kind of pop at all. So, because I'm feeling pretty confident about that. You might say that's a little silly because if you think it's going to drop down, why try to play like a short-term pop? But that is what it is. I decided to play it, so I'm going to try to play it. It's a bit dangerous. And it may make or break me. It might make or break me. I mean, I was thinking about how I had it spread out in a little bit between different things, but then I was looking back and I'm like, the way I'm positioned, I have some puts, but like, the way I'm positioned is if it doesn't go the way I want it to go, I'm going to be in a pretty big hustle to, I think, to get out. This looks good on IWM. Look at that. This is the one that was iterative, right? And see how this iteration went down? See that? This one was going down and then it broke back up. And then this one was the one that was like, oh, it's going to, whatever. Look at it, it's going the other way. Man, I hope I'm right about this. If I'm not right about this, guys, I don't know. I got too much stuff to take care of. I got to figure something out. And even though that guy says I'm not right about anything, I know I'm right about some things in the market. I've made some good money in the market. But I have I have a really vested interest in this pop. I shouldn't have over leveraged, I think. Too confident, Booksy. This made sense to me. I mean, I knew it might come down. I even had the marker. Everything is like right where it should be. May endure final drop holding divergence. Damn. Excuse my French. But that's a dang good call out, guys. Golly, it's dang good. Come on. Gosh, dang, man, that's a good call out. Sorry, I'm just beating myself up over it. You guys are like, yeah, but there was that dude that bought 198 puts, so yeah, I know. I'm curious, did it close beneath? Nope, did not close beneath 550. Look at it, man, it's just there. It doesn't take much. There's got to be some kind of news catalyst. I have no idea what it's going to be. I guess FOMC's coming up, but that's a week away, so I don't know. It seems a ways off. It feels like we need a big Friday, not a crappy Friday. We need a big Friday to lead to a big Monday. Like, I want to be going into FOMC with strength, to be honest. this might be, like, I don't stumble upon very important things very often. When I do stumble upon them, sometimes I get really excited about it, and then I'm like, I'm not sure how I could use that anyways. And then other times I'm like, I use it forever. You know, there's some things that I kind of came upon that I just never, ever, ever stopped using and just developed on it. This feels like one of those things that it may stick quite a bit. So, and it looks really dang correct, which is interesting. I just have to figure out how to find that middle. That's the big question. And I got to figure out how to do how to trade based on it. I mean, it's not enough just to have the information. I got to trade on it, so. All right. No time like the present, I guess. I'm going to head out. I think that for AMC, those of you that are still here that are asking questions, I think we want to see if, for AMC, we want to see what that does on the build out. But I think that it is very low. Right now, I'm going to trust the 226 is going to be a bounce level at least, but I don't know, to be honest, if $1 is out of the question. There's going to be some controversy about that till I go measure it out. I think the first time I did it, I measured it to the top of the cat ear, which is fine. That's the one on the Judge's Earn thing when it popped up. I think that's the top. So that would be like the halfway point. And you got to just kind of take it for what it is. The problem is that there's a shift that already happened. And I'm like, oh, well, does that change it? Because it might. We saw it change a lot of other things. And then I think the valuation chart, it's like, well, 226 is $1. I still believe that. I still believe that's the case. So if it goes to a real dollar on our chart and it's somehow like that's the halfway point, it goes down to $1, we're in trouble, you know, because that'd be super, super low. We'll get there when we get there. I'll have to do the same thing. Maybe I'll do it tomorrow and come back and try to mess with this tomorrow. See if I can figure it out. But I do appreciate you guys hanging out. Thanks. I appreciate it, Hazel. Yeah, appreciate it. And we'll catch you all later.